markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. The Dow at a record. The S&P 500 at a record. Financials, the best performing industry group right now, the S&P 500, the broader index there. J.P. Morgan Chase reporting a surprise gain in net interest income for the third quarter, also raising the forecast for that key revenue source. Shares at J.P. Morgan Chase 4.6% higher. Also heard from Wells Fargo at the unofficial start of the earnings season with the financials. Wells Fargo shares of 5.6%. And BNY Mellon, throw that one in there. That is up right now, 2%. Elon Musk unveiling Tesla's highly anticipated self-driving taxi at a pretty flashy event, but it was kind of light on specifics. A Jefferies analyst puts it this way: Tesla's robo-taxi appears toothless. Tesla, the worst performing stock in the S&P 500. And right now, those shares are down 7.5%. Tesla, by the way, has the 12th biggest weighting in the S&P 500. That's why that matters.
That right?
We checked it. Yeah.
Okay.
Apple is number one.
Yep.
I'd go right down the list. Anyway, we check the markets for you right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alex.
A 45th record high, by the way, if we close at a record high.
But who's counting?
I am. So
Sure.
We're now at 45. This will be 45. This feels important. Anna Rathburn is CIO at CBiz Investment Advisory Services. She joins us now for her take on the market. We made it through Friday. We made it to the kickoff of earnings season. We made it through CPI. This feels like a moment. And now we sit at a record. Are we in the moment where the U.S. economy could actually re-accelerate, that it's going to be the U.S. exceptionalism theme now for even longer?
Good morning. Maybe. I think we're at an inflection point. It's a very important inflection point because we could actually continue to accelerate, achieve that soft landing, which, by the way, is not an ending. So I actually don't like using that term, but maybe continue to grow, maybe not at the pace we saw 2-3 years ago, but at a pace that we're more familiar with. But I do think that if we keep rates too high for too long, we do increase the chance or probability that the economy from that inflection point may go down in the wrong direction. And I think that's why it's really important not to pay too much attention to the volatility in the data and take a look at the long-term trend.
All right, on a long-term trend, where are we here, or where are you guys in terms of your allocation, stocks versus bonds these days?
Yeah, so we do think that there's a lot of noise in the data simply because when you're in an inflection point, you don't know if you're going up or going down. The data is going to be just as confusing, and that's why we don't know, right? So we do think that data dependency of the Fed on the data that's a little bit volatile, that's going to be very confusing for the markets. On the fixed income side, we are keeping duration shorter, not too much shorter, not as short as we were 2 years ago, but certainly shorter than our benchmark, which is the AG. And in equities, we do favor U.S., and we can go into that if you want to, in terms of China and Europe. But small caps, they've been beaten down. And I feel like every time I talk to you guys, small caps run. So I don't know what that means, if it means anything, but it is running today. We think that the Fed, as it continues, and we do believe they've begun a cycle. So as they continue to cut, we're holding on to small caps. We're not adding any more. But we do think that the quality small caps have some room to grow as the rates do come down.
How do you hedge the risk? Like, where do you find that safety now?
Yeah, the safety is hard because, the safety seems to be large cap in equities because, there isn't that much opportunity out there. There's a lot of volatility, especially we've seen in China stocks, and there aren't too many opportunities, it seems to be, in Europe. So everyone is coming into the U.S. But as we just talked about, if Tesla's 12% and then the robo-taxi disappoints, there's a big, volatility just coming from one stock. So it is hard. Do you want to be concentrated in large caps, or do you potentially want to diversify away from that and into stocks that may underperform? So I guess, if you're holding more of a total return type of a portfolio and you have fixed income, I do think that the yields component, even though it may come down in the coming months and quarters, it still offers a pretty attractive income that could serve as a cushion to the volatility in prices if we continue to have those rate volatility.
So do I stick with a 2-year treasury at 4%, or do I take some credit risk and look at the corporate bond market? It seems like every day I've got an investment grade issuer coming to market. There's lots of stuff to buy out there. Do I go high yield? How do I think about credit risk?
Yeah, the credit risk actually really depends on the fundamentals, right? More so than it does in stocks for the short term. I mean, there's a reason why the credit spreads are tight, right? I mean, that's the market's assessment that things look pretty good. And because that treasury yield underneath, we're talking about OAS, but that treasury yield underneath is pretty fat. There's a lot of safety there kind of built into credit. We do like credit. Investment grade credit from an index perspective, the duration is a little long for us, so we are sort of underweight there. But high yield, if you look at high yield, it's the best performer year to date. And it performed really well, even when the bonds were down in 2022 and 2023 as well, because of its high income component and the lower duration component. So we think that there's judicious allocation that could be in the portfolio in high yield as well. I mean, it's kind of I hate using the term Goldilocks, but I'm going to use it. It's a good time for credit.
Funnily enough, though, it feels like the thesis of, hey, money market fund flows are going to go into the corporate credit market at some point, right? Like that's the thing we're all going with. Money market funds hit yet another record at $6.47 trillion as of last week. Like that is not slowing down. And if we take a look at a Fed that may not cut as much as one might have thought in 2025, going from that growth scare to maybe a soft landing, why is that money going to leave?
It may not. It may not. I mean, so money market is interesting because it's not quite cash. It's not quite credit. It's a cash equivalent. I think people love the safety of it, and that after 2008, it's not going to break the buck. So I think they like the safety. The fact that we haven't had anything yield that much, a cash equivalent, and now we're sitting on it. I mean, there's some anchoring bias there too. And it's easy, right? You can take out money whenever you want to. You don't have to think about trading anything. So as long as the yield is attractive, why take the extra risk, even if it feels good?
One real quick question here. Alex and I were at a conference earlier this week, and a lot of folks were talking about alternative investments. Is that something you guys talk about to your clients, whether it's hedge funds or private equity, private debt?
Yeah, so starting with hedge funds were out of vogue for a very long time until things became interesting. And when I say interesting, it means rate volatility, inflation being interesting, currency markets being interesting. And so hedge funds have done very well. Hedge funds, it depends for a lot of our clients, why do you want it? Because it's a big tent. Is it a long short equity? Do you want some beta in there? Do you want absolute returns? So they're exciting from that perspective, depending on what you want. In terms of private equity, private credit, that market has been expanding for a long time, and it sort of blew up after in a good way after the pandemic. We think that's going to continue to grow. Right now, they're a little bit of a soft spot because of the lag in M&A market. But private credit, I think there's going to be at some point a merge of public to private credit. And we don't know if it's going to be tomorrow or a few years down the line. But I think that's going to be available to a wider public.
All right, Anna, thank you so much for joining us. Anna Rathbun, she is the Chief Investment Officer for CBIZ, Investment Advisory Services, and I think probably the only guest we talked to that has a PhD in music. Go figure. That's pretty cool.
That's really cool.
I think it's voice, if I remember right.
Oh, this is a different
I'll tell you who does not have a PhD in music is our next guest, Ira Jersey.
Isn't he the guitars hanging on the wall, though?
Yeah, I don't know. He's like a soccer guy. Supposedly he dabbles in this whole interest rate treasury market thing, but he does it all for Bloomberg Intelligence. We always appreciate getting a few minutes of his time. Ira, we got some inflation prints over the last couple of days. Anything that you think is going to maybe get the attention of the Federal Reserve?
Well, I think that overall, you take the two prints into in totality, and we're still on a trend that inflation is going to remain above the Fed's target, probably for when you see the PCE deflator, but it'll be pretty close. And I think that that's the kind of the broad takeaway from both of these figures. So if the PCE deflator comes in on a year-on-year basis at like 2.2%, that's going to make the Federal Reserve reasonably happy. Of course, you had the benefit back in September that oil prices were still coming down. Now they've rebounded a little bit because of a variety of things. But yeah, generally speaking, I don't think it changes a trajectory. And I think, Paul, we spoke last week. I don't remember if it was here on Surveillance about, our view is that the retail sales numbers next week will be more important than the inflation data that we received. And primarily because we want to see, is the consumer able to maintain this kind of spending amid a lot of uncertainty, amid, jobs. Yes, the job market seems better than people thought, but it's still slowing significantly. And at the same time, prices are going up. So are people going to be priced out of some goods and services?
I don't understand why the long end is moving higher. Is this just a positioning unwind because we kind of overpriced a growth scare, or is there something else going on?
So yeah, this is something that we mentioned this in a note that we put out earlier this week about the idea that the curve was going to steepen. The question was it going to be bullish or bearish? So if the Federal Reserve is going to be slow to respond, in my view, to any meaningful rebound in the economy. In fact, the Fed probably wants to see the Goldilocks soft landing scenario where the economy continues to run as it has, like in a steady state, basically in some of the data that you've seen recently. And because of that, then the market is going to have to price for there to be probably higher interest rates at some point in the future, because you wind up having a reacceleration. Now, that might not be 2025, it might be 26 or 27, something like that. But the market is still going to worry about that. And in order to price in that option, you have to get a somewhat steeper yield curve. And in this case, it's going to steepen bearishly. You don't normally get a bear steepening in an environment where the economy is decelerating. So I think eventually this will turn into bull steepening once again, where 2-year yields start to go down faster than 10-year yields or 30-year yields. But that's a reason why I think we're repricing some of this. And initially we wound up bear flattening because we priced out some about 50 or 60 basis points of interest rate cuts. But now we're at a point where we're more in an equilibrium, and the market thinks, the Fed's going to cut the 3.5% to 4%. And once they do, then the Fed may eventually have to hike again, and that's the reason why you see this bear steepening of the curve.
All right, Ira, great stuff as always. Ira Jersey, thank you very much there, Ken. Ira Jersey, Chief Interest Rate Strategist, Bloomberg Intelligence, giving us up to date there. All right, Alex, just in the past 2 weeks, 2 of the 4 Sweeney offspring have reached out to me and said, Dad, do you have a special secret password for Bloomberg.com? Because I got blacked out on the paywall.
Ooh.
And the answer is no, I don't. But B, well, one of them's a student, so I'm going to cover him.
Okay.
The other one, I'm
Seems
like,
fair.
dude, you got like a real job. You're making good credit.
Yeah.
You pay for it. You pay for content, dude. And
Yeah.
if you find this content valuable, which I think it is at Bloomberg.com, then you pay up for it.
Yeah.
But at least they're reading it.
That's
That
actually
was
really
good.
amazing.
Yeah, one guy's in the biz, so he's kind of
Okay.
invested.
I talked to my daughter, granted she's 10, about things that I do, and she's like, shh, just fell asleep, Mom. Thanks so much. So that was great. But hey, at least your kids appreciate it. All right, much more coming up. This is Bloomberg Intelligence.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks hitting fresh all-time highs. Big banks rallying after kicking off the earnings season with some pretty solid earnings. Shares at J.P. Morgan Chase right now, they're up 4.7% after posting a surprise gain in net interest income. They also raised their forecast for that metric. Wells Fargo, those shares right now, they are gaining 6.8%. And they topped analyst expectations. Tesla dropping 7.4%. They unveiled the highly anticipated self-driving taxi, but it's kind of light on specifics. Measure of prices paid to U.S. producers. That was one of the pieces of economic news today. Unchanged in September. That was restrained by declines in gasoline. And it does suggest a little further progress toward taming inflation. And consumer sentiment, as measured by the University of Michigan, unexpectedly falling for the first time in about 3 months. S&P 500 right now, 37 points higher. That's up 0.7%. 58.17 on the index. Again, a new record there. Dow Jones Industrial Average, record there, up 315 points. That's a rise of 0.75%. We're at 42,769. The NASDAQ 100, 48 points higher, and that is up 0.2%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alex.
All right. Thanks so much, John Tucker. I'm Alex Steele alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries worldwide. So here's a story I don't understand. So it's a great story to then talk to Bloomberg Intelligence about. A TD Bank is going to pay almost $3.1 billion in fines and other penalties and face a cap on its U.S. retail banking assets. This is after pleading guilty to failing to prevent money laundering by drug cartels and other criminals. We got the legal side, we got the business equity side for you here. Elliot Stein is Bloomberg Intelligence litigation analyst, and Paul Goldberg is Bloomberg Intelligence senior equity analyst. Elliot, start with you. Explain to me the legal story here.
Right. So yesterday, TD Bank became the largest bank in U.S. history to plead guilty to money laundering violations. They paid $3 billion, which is now the most any bank has ever paid for money laundering violations. And they are now only the second bank to have an asset cap imposed on them after Wells Fargo over 6 years ago. Although it should be noted that the asset cap on TD Bank is only limited to its U.S. retail bank operations, so it's sort of a smaller asset cap than the one imposed on Wells.
Hey, Paul, how much does this impact what investors kind of their view of TD? $3 billion is a big number, Elliot says, but they got $120 billion in market cap. So what do you think?
Yeah. Hi, Paul. The $3 billion is not that big of a deal for them as a bank. They have 13% of capital ratio, and they reserved most of it already, just shy of a few dollars there. The asset cap is a bigger issue, and it's going to impede growth. Now they gave some ins and outs, what they're going to do trying to accommodate the new requirements from the regulators. They're going to cut their U.S. assets for those retail banks by about 10%. It's going to be an additional $1.5 billion charge. And even excluding that charge, some of the actions that we saw, when we ran the numbers, it could be as much as another 30 cents on the earnings. So another few percent of the earnings are going to get shaved in next year. And how long is it going to take to unwind? It's going to take some time.
This might be a silly question, Elliot, but like what did they actually do, and have they actually fixed that part of it?
Like, who launders money anymore? I didn't know.
Yeah, so the laundering here was by Chinese drug cartels and other drug cartels as well. And I think what's notable is that TD Bank employees were accepting bribes from these cartels. Yeah, a couple of them were indicted previously, a couple of TD Bank employees. So I think that's what made this sort of a more egregious case, because usually with banks you see that their AML processes are deficient. Here you have bank employees participating in the crimes, and that can get imputed to the bank itself, and that's what made it a worse case.
Paul Goldberg, I'm looking at the stock kind of flat on the year. What's the call on a bank like TD, and maybe just Canadian banks in general?
Canadian banks sort of sitting at a crossroads as the Bank of Canada started cutting interest rates ahead of the Federal Reserve here. They've done 3 cuts already. They kind of sit in between the two worlds. One is the slower growth and the risk of actual recession, which is kind of minimized at this point. And the other one is the profitability. The loan growth slowed quite dramatically in Canada and somewhat in the US. And their mortgage market is a little bit different than the US when mortgages reprice to a higher rate, which exposes consumer to a very different risk. And about 75% of mortgages overall, and a lot of them that were issued at a very low rates during the pandemic, are due to reprice in 25 and 26. So a lot of what's going on and what might happen, people are looking at the Bank of Canada and how well it can actually prevent that from spilling over into consumer pains.
So then based on that, when you take a look at the stock, it's down by about over 2% today. Do we see, it was down about 6%, I think, yesterday. What part of this is reflected in the stock? How much of the macro, Bank of Canada, and then how much of this kind of legal fees, et cetera?
So I think the macro has been reflected in the stock for quite a while because relative to peers, it's been underperforming all year. And the story on the whole kind of the AML story has been around for over a year as well. So a lot have been reflected as well. I think what people were not really expecting is the asset cap. And even though, as Elliot said, it's only the U.S. retail operations, so the assets of those two operations are only about 30% of the total bank assets. It's still kind of unexpected, and that's what's pressuring the stock. They gave sort of clarity in what might be the pressure in 25, but the question is, and this is kind of goes back to Wells Fargo, where every quarterly call, people are asking when are you going to be done with the cap, and we've been out there for 7 years already. So, what's priced in there in that respect is kind of hard to tell.
Hey, Elliot, this asset cap, which I just learned about like 15 minutes ago when Allison Williams explained it to me in the context of Wells Fargo, so now I think I know all about it. This seems like a real deterrent for regulators to rein in, banks' behavior here. I mean, writing a check is easy. They can reserve for it, no big deal. This seems like it could really have some teeth.
Yeah, and I think it's sort of a new wave of like enforcement weapons that regulators are bringing. Because you did have Wells Fargo's asset cap almost 7 years ago, but more recently, we've seen the OCC impose different business limitations on Wells by requiring them to get OCC approval if they're going to expand into new products or new markets. And we saw that with TD Bank yesterday as well, because in addition to the asset cap, if TD's U.S. operations want to expand into new markets or open new branches, they have to get OCC approval as well. So we're seeing new tools that regulators are using beyond just monetary penalties, which, critics say are, just the cost of doing business.
So for Wells Fargo, part of it is for the broader asset cap lift. It's sort of like, when you see it. Like, it's nothing you can point to that, like, they're going to fix this and then all will be well. That's sort of just transparency and rules they have to just clean up and they have to just do better. What is it for TD?
It's similar to what Wells Fargo went through, but, there's no... That's the problem.
There's no magic moment?
It's sort of, exactly. It's up to the OCC. There are steps that the bank has to take along the way, right? They have to put in a plan that the OCC approves, then they have to implement the plan, then they have to get a third-party independent reviewer to sort of sign off on it, and then that third party presents it to the OCC, and then the OCC signs off on it. But there's no crystal clear moment.
That's interesting.
Yeah, where it gets lifted.
That's interesting. Also, it's like, how do you prove that your workers are no longer taking bribes? Like, what does that look like?
Right, it's like proving a negative.
No, we promise.
Yeah,
it's like proving a negative, exactly. Guys, really interesting story. We thank you both. That was really fun. Elliot Stein, Bloomberg Intelligence litigation analyst, and Paul Goldberg, Bloomberg Intelligence senior equity analyst, talking about TD Bank paying almost $3.1 billion in fines and other penalties and facing a cap on its U.S. retail banking business by pleading guilty to failing to prevent money laundering by drug cartels and criminals.
Like depth of research coverage. We actually got a dude who covers litigation stuff, like all that stuff.
All that stuff.
And he's got a job. But then we've got a guy who covers, like, Canadian banks. Who does that?
That guy, Paul.
Yeah,
Paul does the Canadian banks, He likes the macro. He likes the micro.
Basically, it's my nice way of saying we cover everything at Bloomberg Intelligence.
Literally everything and every
Thank
angle.
You to all those people that invested with us.
Shameless plug. All right, coming up, we're going to talk about Steve Cohen and a casino bid. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. And we are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. So, you know that the Mets are doing really well. Did you know that?
Yeah. And so are the Yankees. So we are 4 games away from having a Subway Series.
Yeah, it could be really cool.
You're not buying.
No, I'm buying it.
Okay.
Subway Series would be really cool.
Okay.
What I'm interested in is what happens with Steve Cohen's New York casino bid. So everything's going great for the Mets. He's super pumped. What about a casino bid? There's a great story on the Bloomberg that talks about how New York Governor Kathy Hochul has now denied a report that she plans to ease the way for billionaire Steve Cohen, who's a political donor to her, by the way, to build a casino and entertainment complex next to, guess it, Citi Fields in Queens. Joining us now is Laura Namia, Bloomberg News reporter on this. Okay, walk us through it.
Yes, so Governor Hochul told our colleague in Albany, Zach Williams, yesterday that she hasn't planned to introduce legislation in the state budget that would come out in January that would effectively be an end run around the state legislature, which was looking like earlier this year they were not going to pass this piece of legislation that was critical to the possible success of Steve Cohen's $8 billion casino plan. Essentially what the problem is that he wants to build this casino on a parking lot next to Citi Field where his Mets play, but the parking lot is technically on state parkland. And so a piece of legislation is required that would alienate this parkland for use as a casino, and the state senator whose sign-off is essential for that said she didn't support it. But Hochul was, according to sources who talked to the New York Post, was considering doing this in her budget, which gives her a lot of power. She's denied that as of yesterday. And so the fate of Cohen's casino is still up in the air.
Has the Post come back and said anything about her comments here?
Well, I think you maybe have to read a little bit between the lines. She did say, I have had no plans to put that in my budget, which a student of semantics might see some wiggle room in there for her to potentially change those plans. The budget is still several months away. She could always change her mind. And Cohen has been a really significant donor to Kathy Hochul's, or to the New York State Democratic Party, which Kathy Hochul is technically the leader of, and which she is trying to use to help Democrats win back the House in November elections.
This is a silly question, but do we not want the casino? Like, it feels like a good revenue opportunity. I don't know. Would that be bad?
That's a question that you would have to ask the Queens State Senator, Jessica Ramos, who is the person who said she wouldn't support the legislation. It's a little bit wonky and technical, but on issues that are related to land use, both state lawmakers and city lawmakers tend to defer to the lawmaker whose district any potential project is in. And so they effectively have a single person veto over any project. And we don't know exactly what the reasons are that Jessica Ramos was so opposed to Cohen's casino. She is a very progressive Democrat. She thinks it would make a great park, a great amusement complex, but is opposed to the idea of a casino altogether and put the kibosh on it in, I believe, in May this year. A lot of other lawmakers in the area do support the casino idea, and they were unhappy with Ramos's decision, but it effectively sort of cut off the avenues for legislators to help out Cohen with the legislation he needs.
But the Mets are in the National League Championship Series round. I mean, can we cut Stevie a break here?
I mean, yeah, and he's busy too, so let's make it a little easier for him.
Exactly. Right? So, Laura, I mean, I guess where do we go from here on this in terms of, you know, maybe getting a permit and just moving this process forward?
Well, if Hochul were to put something like,
oh, looks like It looks like bizarrely we have lost to sound.
There she is.
Oh, there you are.
Can
okay,
you hear me?
start
Sorry.
again. Yeah, can you go again?
It's an open question whether or not she can actually do this. Some lawmakers are contesting her ability to do legislation like this in the budget, but if she were to do something like that, the governor has extraordinary power in the budget. Legislators, state lawmakers can take things out but can't add things back in. Previous governors have welded it to get their priorities through. You can attach basically any legislation you want to the budget. And if she does that, it could really give him the lifeline, give Steve Cohen the lifeline that he needs to get this, to make this casino viable. It wouldn't necessarily guarantee that the casino would win there's only 3 available licenses and a bunch of bidders, but it would make it so that he's legally allowed to build the casino on this parking lot that is technically state parkland.
All right. Thank you so much for joining us. We really appreciate it, Laura. Laura Namias joining us, a Bloomberg News reporter. Okay, would you go to a casino that Steve Cohen built in Queens?
No, because I only go to Vegas casinos. That's just my thing. But I bet you a gajillion people would.
Right.
So, I mean, that's why I think everything that I've read and heard is, oh, this is going to happen. But you
yeah.
got to deal with all the New York City politics to get it through. But
What? I mean, really?
yeah, but if you're Steve Cohen, A, you've got the money. B, you've got a lot of, given the success of the Mets and what he's done with the Mets, I would think a lot of folks would be backing him.
You would think, right? And also just
yeah.
it would be like a destination now. Like,
yeah.
like Atlantic City, but not because they also have the Mets.
Right.
So,
And it's New York.
and it's New York. New York is awesome. All right, they're up for the first hour of Bloomberg Intelligence. We have lots more coming up. Priya Misra, fixed income portfolio manager at JP Morgan Asset Management, will be joining us. So her thoughts on the curve and why that long end keeps selling off.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are 2 big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday, everybody. We made it to the end of the week. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance. We have a great hour lined up for you. Priya Misra standing by, fixed income portfolio manager at JP Morgan Asset Management, one of the best. Plus, Jen Reed, Bloomberg Intelligence senior litigation analyst. We're going to talk more about what's happening with Google. And then plus, you got munis because it's Friday. Max Adler, as Bloomberg Municipal Bond reporter, will be joining us. Also, what Hurricane Milton did in Florida and how that impacts the muni bond market. All that and more coming up within the next hour. But let's kick it off for you with Charlie Pellet with your Bloomberg Business Flash.
All right, thank you very much, Alex Steele. We are looking at records on this Friday. The Dow, right to the numbers, up 303 now, up 0.7%. We've got the S&P 500 index pushing higher by 29, record there, 5809, where we stand on that index, up 0.5%. Nasdaq up 40 to 18,322, up 0.2%. The Russell 2000 outperforming by far, up 1.5% right now. Small cap shares rallying into the weekend here. 10-year 4.08%, the 2-year 3.95%. Gold up $24 the ounce, 26.54, up 0.9%. And West Texas Intermediate crude up 0.1%, 75.94 for a barrel of WTI. Bottom line here, stocks at records, big banks rallying after kicking off earnings season with solid earnings. Case in point, JP Morgan Chase up 4.2%. Wells Fargo up now by 5.3%. So again, the Dow, the S&P, Nasdaq all pushing higher. Lots of economic data. PPI Friday, and consumer sentiment as measured by the University of Michigan unexpectedly fell for the first time in 3 months as lingering frustration with a high cost of living offset more sanguine views of the job market. Joanne Chu is Director of Surveys of Consumers at the University of Michigan, and she was interviewed right here on Bloomberg Intelligence.
I don't think that the FOMC announcement necessarily moves the UMich data at all. It doesn't really move consumers. That being said, consumers are fully aware of the interest rates around them. And when we ask them about buying conditions for large purchases like cars or durable goods or homes, the spontaneous mentions of high interest rates has fallen this month. So consumers are perfectly aware that interest rates are going to have been falling.
And you can hear more of the conversation on the Intelligence podcast. You can download it wherever you get your podcasts. So again, recapping here, banks surging after earnings. JP Morgan Chase up 4.2%, 10-year yield 4.08%. Records for both the Dow and the S&P 500 index. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well, so head over to youtube.com and search Bloomberg Live Radio. All right, Jess Men's here. We're going to talk some stocks here. But Jess, your Texas A&M Aggies, you're 5-1 right now, ranked number 15th in the country. I'll give you 9-3. I'm looking at your schedule, maybe 10-2. But man, your last game is, I think it is every year, Texas.
So actually, this is the first time that Texas A&M is playing the University of Texas in over a decade, because what happened, it was maybe back in 2012, 2013 is when A&M moved out of the Big 12.
That's right.
And so then
but now
they
you
moved
guys
to
are
the
all
SEC.
in the
Right, so
SEC.
this will be usually like what had happened before. UT and A&M would always play on Thanksgiving. It's not this year, but maybe we could start up that tradition again.
But man, November 30th, Texas.
That's right.
Texas
I know Tom Keene wants to go.
That's going to be a tough
Tom Keene wore his Texas A&M bow tie.
I saw that.
A couple days
Very
ago
good.
whenever I was
all
on.
right, so we got Alex all caught up here on the Texas A&M
for sure.
football.
I was researching yields, but whatever.
Hey, we were 25, now we're ranked 15, so I'll take it.
It's all good. What are you seeing in the stock market here today? It seems like the market liked some of the economic data that came out.
That's right. Obviously, I know all eyes were on the bank earnings this morning, so I know that's been discussed a lot. I wanted to point out, though, tomorrow is actually the 2-year anniversary of the bull market anniversary for the S&P 500 when it hit its closing low on October 12th, 2022. Right now, the S&P 500, if you look at the comp function, up over 6% in that span. So you can also use an ROC function in the terminal for rate of change. And so if you look over that specific 24-month period for the S&P 500, if you go into a GP in the chart, you can basically structure it for rate of change for particular types of months. So over that 24-month period, actually, the S&P 500 is on track to be in the 90th percentile of that span in the past 80 years. So it shows you just how strong that run's been so far. And then obviously for the week, both indexes are up roughly about 1% for the S&P 500 as well as the NASDAQ 100. So that would actually put the S&P 500 on pace for 5 straight weeks of gains, and that would be its longest winning streak since late May. So obviously a lot of size and scope there for where we're at so far right now.
Individually for the stocks, what are some of the big, well, let's just go to Uber and Lyft for a second, because isn't Uber like the best performing stock on the S&P?
So right now, actually, yeah. So if you look over at Lyft, I'll update this real quickly. So right now, yeah, it is up about 10%, on pace for its best day since August 8th. And then if you move over and look at Uber, UBER is the ticker symbol for that one, up 8%, on pace for its best day since August 6th. So obviously that's coming off of the back of so many people were watching very closely what was happening with Tesla after the closing bell yesterday, because Elon Musk was revealing what was going to happen with the prototypes with the robo-taxi. So unfortunately, there wasn't too much detail, as much as details that investors wanted to hear. So Elon Musk basically, as far as when it came to the plans for the car maker and as far as when it comes to its self-driving vehicle service and how it would compete with its firm, that's why you're seeing the other two rally on that, because they're going to benefit if, when you think about the competition between the three of them, if the details are scarce, that's why you're seeing a big pop there. Also, Truist was talking about, particularly if you're looking at Uber, and after that Tesla event, it was saying the EV maker announcements weren't likely to alter the competitive landscape in the near term when you're looking at Uber or Lyft. So that's what, when you're looking at the sell side analysts on Wall Street, what they're seeing there.
Well, also remember, Waymo and Uber have a partnership for those self-driving cars. So if Tesla can't be that competitor right now, and that's sort of a benefit on that end.
I guess, and it also tells you that the market really does view driverless taxis as a real threat. Like, I don't, but because I feel like they're so far down the road in terms of competition, but the moves in the stocks.
Yeah, so like Uber, for instance, the MOV function, so Uber's the best performing stock in the S&P 500 right now. Tesla, on the other hand, is the worst, so it's down about 7.5% right now, on pace for its worst day since September 6th.
You're also looking at A.O. Smith. What's going on here?
That's right. So I wanted to bring up some other stocks beyond the banks here. So this is actually a water technology company here. And so pulling that up, the AOS is the ticker symbol on this, down about 5.7%. So it came off, it was down steeper earlier this morning, but what happened here, it actually lowered its annual forecast for net sales as well as adjusted earnings per share. So it did cite continued softness in its China business. So this is a company that's a manufacturer of water heating and water treatment equipment. So this is more kind of probably would be categorized as a mid-cap company because its market cap is around 12 billion right now. S&P Dow Jones Industries defines whenever they're taking and putting companies into the S&P 500, usually the market cap has to be around 8 billion. But if you look at this, 15% of its shares for A.O. Smith were trading at the bid price, and 13% were at the ask. So you're seeing a lot of movement when it looks at this particular stock, even though it might be a little bit smaller than obviously the larger cap companies in the S&P 500, still moving a lot here.
All right, Jess, we appreciate it. Thank you so much. Jess Menton, a Bloomberg News senior equities reporter. Really great. Super appreciate that. Oh, sorry, deputy team leader and senior reporter. It's important to get the full title in there for sure.
And pound for pound, nobody gets more stuff into a report than
I know, right? But like, it makes sense.
Yep,
There's still a story. It is impressive. Let's get back to the bond market here. So we had the PPI, which seemed pretty benign. You have nothing really happening in the front end. Long end, though, still selling off. Joining us now is Priya Misra, Chief Fixed Income Portfolio Manager at JP Morgan Asset Management, joining us there. Priya, what is going on with the long end? Why the sell-off? Is there something fundamental? Is it repositioning? Is it something else?
I think it's a combination of a couple of things. So we had this really strong jobs report. Now, I know it's one report. It is subject to revisions, but I think the broad-based strength of that report, I think, is making the market consider exactly where is neutral rate. And I think that neutral rate, if you were thinking the Fed's around 2.9, what if it's 3.5? What if it's 4? I think that's part of it. So we saw that repricing starting with that report. The other one is we have an election in less than a month out, and I think we can debate the makeup of Congress, the presidency, but fiscal restraint is not something either party is talking about. Even in a divided government scenario, I think there's a case to be made that the taxes will get extended, a lot of the spending will continue. So I think the market is reassessing that term premium. Now we're not worrying about inflation or growth. We're worried about what is the outlook after the election, and with all this fiscal question mark out there, I think we're reassessing how much will the Fed cut. And what should be that term premium? How much more should you get paid if you're giving the government money for 2 years versus 10 years? And I think it's the combination of the two, along with probably some positioning. I think the market was long, given the previous two payroll reports. We were long into that payroll report. That's why the long end has sold off. I think we're starting to see some value, but before the election outcome and before realizing what's happening on the fiscal front, I think people are going to be nervous to step in and really buy the long end.
All right, Priya, in terms of credit, how much credit risk do you want to take these days? Because, again, you can sit in a 2-year treasury and get close to 4% here.
Right. I think, and credit spreads are tight. On any historical metric, you could argue I'm not getting paid up enough for credit. Here's why I'm going to argue that high-quality credit or owning high-quality corporate paper, even with these tight spreads, makes sense. So 2 points on that. Number one, you talked about I can be in the very front end and still earn 4%. Well, we think the Fed's going to continue to cut. The urgency for 50 is clearly not there, but I think a gradual pace of 25, getting close to a 3 or 3.5 on Fed funds. So that front end or money market yield where you may have, it's felt great to be there, that yield is going to go down over time. Secondly, look at corporate America. I mean, we're in a soft landing. This is the time when you should be picking up a little bit more spread. You have to be careful, you know what you're buying. But in the investment grade corporate market, I would even go as far as the high quality, high yield market. So the double B, even some single B, look attractive. I mean, look at balance sheets. What are companies doing with the debt that they're issuing? They're not re-levering up. This is not end of cycle behavior from corporate America. There has been issuance, but it's been taken down really well. The issuance is all pre-funding maturities that are coming up. So companies are very smartly trying to push out that maturity wall. So I would say if you're picking up 100 basis points in high quality IG, investment grade, or 200 in high quality, high yield, it makes sense. As long as we stay in a soft landing, pick up that yield. and extend out the curve. Maybe 30 years too far out, 5-year corporate bonds, I think make a lot of sense as long as we stay in the soft landing. And the data or Fed policy is telling you that the soft landing should be our base case.
Well, it's just so crazy because I feel like in the beginning of August, it was a growth scare, and then it was a soft landing. And now there's some talk about, are we actually reaccelerating here, and the Fed's going to have to pause. Now that conversation, like Bostic pointed out, Raphael Bostic this week supported that. This is just such a weird time. Like, how do you manage that kind of narrative shift?
I completely hear you, Alex. I think the market flips from one narrative to another very quickly, every data point based. I think part of it is the Fed keeps telling us that they're not data point dependent, but there is no forward guidance. And we went from pricing in 25 to 50 within a week to now pricing less than 25 at the next meeting. So I think the market's clearly treating Fed policy as data point dependent. But here's what it boils down to. The data is mixed. I mean, there's some signs of slowing. I think we don't know. I think the last time I was on, I was telling you, I don't know if we're slowing to potential or below potential. I think we're still in that same place. Before the payroll report, there you could point to a couple of data points on the labor market, and I think it will come down to the labor market. So watch claims. And here's the bad news in this. We're not going to have very reliable data in the next few months because the impact of the strikes, the impact of the hurricanes. So we're going to have to look at the totality of data as the Fed is doing and then see, is it convincingly leading us one way or the other? I think the market's overdoing the moves on both directions. We didn't think a recession was very likely early August. I don't buy the no landing scenario right now. I think we're slowing. Here's the thing, soft landings are rare. The Fed hasn't really been able to pull it off before. So I think that it's understandable why the market's skeptical. But maybe this is the one time where somehow they're able to cut rates to neutral or to whatever is their estimate of, or the economy's estimate of neutral at the same time as the economy slows down. So perhaps this is the one time where we'll be in soft landing. But I think we should be careful not to swing from one end to the other end. The market is, and I think that's where we get opportunities. I think if the market prices out any more cuts in the front end, we'd be looking to buy the 2-year. I don't think the Fed stops the easing cycle, but the market can certainly run with the narrative in one direction.
Priya, are there any sectors, industry sectors that screen well for you, given that background?
Sure. So there's these growth sectors, utilities, for example, was not necessarily, I would have said that that's a growth sector 2 years ago, and here we are, electrification, AI. So I think within the investment grade sector, I would say utilities make sense. There's areas in communication in the high yield space where we think, the sector might have been beaten down a little bit. We think there's value there. Financials. Now, financials have done well, but we still think that there's value. I mean, I'm going to be looking at the earnings season starting out, and we just got the banks. What I'll be watching is, do margins stay strong? Because, if revenue growth, if the economy is slowing, I mean, we're likely slowing to trend or just below trend, not recession. But if we are slowing and companies have already gotten a lot of productivity out of, what they could do to keep costs low, it's going to come down to how much further can they do on the productivity side. And so if margins remain strong, I think then there's a lot of sectors you can look at. I mean, there's certain sectors I think you have to look at valuations too. I think many sectors make sense, but if the market's already priced that in, we'd stay away from that. Industrials, in our view, look rich from a valuation standpoint. But financials, utilities, there's a bunch of sectors. Securitized credit. I think people look at CMBS and get nervous, commercial real estate. But look at single-family rental. Housing is still very unaffordable. So people are forced into the rental market. You have a job, you're earning, you're making your rent payment. That's a sector that makes a lot of sense. It's positive cash flow. So across unlike equities where I think you have to have a view on tech, I think in fixed income, it's like making me pick between my children. It's hard. There's opportunities in many sectors.
Priya, we appreciate it. Thank you so very much. We always love when you join us. Priya Misra joining us at JP Morgan Asset Management. She is a fixed income portfolio manager. And just to update, Market Drivers report was brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about our consultative, am I saying that right?
I like it, consultative.
Yeah, consultative support and technology. And and we were down in Orlando at a Commonwealth event. That was pretty cool. They're really doing a lot of great stuff for RIAs and their advisors. All right, coming up, you got Max Adler, Bloomberg Municipal Bond Reporter. We'll be discussing the latest news from the muni market, BAM. Also, just taking a look at, say, how Hurricane Milton and Hurricane Helene impacted the bond market. Plus, we got Steve Mann will be joining us, Bloomberg Intelligence Senior Autos Analyst, on Tesla's Cybercab dud launch. Can I call it a dud launch? I mean, kind of. Look at the stock. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long for you here at Bloomberg. We have got the Dow, the S&P. They are both advancing. Right now, we are looking at records. This update is brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. The Dow up 343 points, a gain of 0.8% at a record 42,794. The S&P above 5,800, 5810 right now, up 30, a gain there of 0.5%. Nasdaq up 34, up 0.2%. The Nasdaq 100 index wavering right now between gains and losses. It is down now by just about half a point. The Russell 2000 index of small cap shares surging 1.6%, 2222 on the Russell 2000 index. Bank earnings Friday, JP Morgan Chase, Wells Fargo both surging. JP Morgan Chase up 5.1%, Wells Fargo up 5.6%. Uber and Lyft both higher after Elon Musk's Tesla company offered few details on the carmaker's plans for a self-driving vehicle that could compete with ride-hailing. Tesla shares today are slumping 8%, Uber up 9.2%, Lyft up by 11%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellett, and that is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's focus on munis is brought to you by Build America Mutual. BAM Mutual insures municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Be part of Building America. Invest in BAM.
BAM.
Insured bonds. Very good there. All right, let's bring it on. Max Adler. He's Bloomberg Municipal Bond Reporter for Bloomberg News, joining us via that Zoom thing in Los Angeles. Max, let's go right to the big story, I think, of the week, and that certainly applies to the municipal bond market, and that is all these hurricanes that have been kind of ripping through Florida and the southeastern U.S. Talk to us what impact that might have on some municipal bond debt out there.
Well, thank you so much for having me. As we know, Hurricane Milton wreaked havoc on Florida the last couple of days. And there are some towns where economic activity will be brought to a complete halt as they rebuild and recover. And for bonds that were issued in those areas, the most at-risk evacuation areas, there are some revenue bonds that are tied to specific projects, and some of those revenues might be drying up, and it might be harder for those issuers to keep up with their interest payments.
What about rebuilding stuff? Does that usually wind up taking munis or muni bonds, or is that more of like FEMA government funds?
We definitely will see a surge in issuance as a lot of these communities look to rebuild. They will definitely rely on the muni market. There are already examples of Florida from previous hurricanes where muni bonds have been issued in the past couple of years to try to rebuild. In Naples right now, they are rebuilding a boardwalk that has been destroyed several times over the last 2 decades. And we could expect a lot more activity in the muni market for projects like that.
Max, do municipalities and issuers in Florida, do they have to pay a higher rate, maybe a premium, just to compensate investors for,
good question,
hurricane risk, I guess?
Well, this has been like an ongoing debate in the muni market. There are certain analysts that think that climate risk hasn't been properly priced into municipal bonds right now. We've seen a lot of different municipalities issue bonds for climate resiliency projects over the last decade. California is trying to do some of that. They have a ballot referendum on the November ballot. So a lot of people are thinking about climate risk right now, but it doesn't seem like it's being adequately priced into the price of bonds yet. We might see there being some yield upside in some of the bonds that are issued in the coming quarters as they look to rebuild. But this has been an ongoing discussion, and people haven't really come to agreement on how to properly price in climate risk into municipal bonds.
Interesting. Another headline that caught my interest this week was that San Francisco is going to have to shut down 9% of its public schools during a budget crisis. I mean, as a parent of a daughter in a public school in New York, that is awful and terrifying. Can you walk us through the latest with this?
I also went to public school in New York, and I have much love for the public school systems across this country. So San Francisco is having some economic woes. There was talked about a lot in the wake of the pandemic. They were kind of the poster child for what they were calling the urban doom loop, when a lot of commercial real estate vacancies and a lot of people were leaving the city. But then in 2022 and 2023, we had this AI boom, and people were talking about the city differently. Revenues were increasing, but that seemed to kind of be a bit of a Band-Aid. The city still has a lot of underlying economic problems, a lot of it dealing with people moving out of the city, which has led to declining enrollment at the public schools. And also, that public school system has been marred by a lot of political controversies as of late. They had 3 school board members that were recalled last year, and they currently have 2 members of a California emergency management agency that are overseeing fiscal decisions that the school board makes. They could be heading for conservatorship. This totally mangled that word. There are other school districts. There are other school districts in California that have been placed under watch by California. It happened in Sacramento. It happened in Oakland. So we could be headed that way for San Francisco as well.
So just give us, I guess, from your perspective of the municipal bond market, I mean, how is San Francisco these days? I mean, if San Francisco wanted to go out and raise money, could they? And would they have to pay a big premium, or?
I think they could go out and raise money. The big problem is just the commercial real estate. That seems to be something that they're trying to grapple with. They're trying to figure out how to raise revenues from other places. I believe that like 33% of all office space in the city is completely vacant. But there are other revenue streams that are showing signs of comeback compared to their post-pandemic levels. So it's not a dire situation. 2-3 years ago, people were predicting that San Francisco was headed towards a recession.
Yep.
It seems like they fought that off for the time being, but they definitely have some problems that they have to patch up.
All right. It's good stuff. Max Adler, thanks so much for joining us. Max Adler, Bloomberg Municipal Bond reporter from LA. Our San Francisco bureau is fantastic. It's Pier 3, I think, in the Embarcadero, spectacular space overlooking the Bay Bridge, right on the pier. So Bloomberg, big time commitment to San Francisco with a really, really good bureau out there, and a lot of other good tech folks there as well. Downtown, we have a lot of tech folks located downtown in San Francisco. Let's move on to Tesla, another story that is really getting people's attention here. I thought the things kind of looked cool, the robo-taxi, the little bus thing, but a lot of folks kind of said, it's kind of disappointment, more so on the lines, maybe didn't get as much detail as maybe folks were hoping for. Steve Mann, he covers all this stuff for Bloomberg Intelligence. He's our automobiles analyst here. Steve, what'd you make of the Tesla unveil, if you will, yesterday?
Yeah, they did put on a very good show, but at the end of it, I was like wondering if there's more. Is this it? And you know what they showed yesterday, I'm not sure if they needed to delay that the announcement for 2 months. Remember, they were initially supposed to do this on August 8th. Overall, I mean, I still like the approach that Tesla is taking in developing autonomous vehicles, which is, you know, using basically all camera system instead of LiDARs and AI. Look, I think the investors are looking at, you know, when is Tesla going to able to launch this newer, cheaper, you know, less than $30,000 vehicle, less than $30,000 vehicle, and you know the prototype that they showed yesterday, like leaves a lot of questions. It is a prototype. I think there's still need more work to be done to actually launch it by 2026. The concern is, will they be able to launch it at the end of 2026 or early 2027?
How is Tesla an investable stock? And if you buy it, what are you investing in?
Well, I think if you look at the valuation, the auto business is probably only worth 30% of the current share value. Really? Most of it is actually on the AI, the robotics, the autonomous vehicle, and the energy business. So I think what you're seeing today in the retreat of the stock price is really a question about, when can they generate revenue on this? Now, on the autonomous side, I think, in our model, we don't think they can really generate meaningful revenue, not until like the middle of the next decade. So the question is that being pushed out? But more so, I think a lot of the analysts on the sell side baking in this cheaper vehicle going on sale at the end of 2025, and it looks like that's been pushed out into 2026. So
go along Alex's kind of line of thought there. More so than ever, I think, for the Tesla story, you have to buy a vision. You have to buy in on a vision on several different product lines. Is that kind of where we are today, Steve?
Yes, I think so. I think there's, I think what the investors will be very focused on in the next few quarters is, can they launch that, less than $30,000 car, right? Sooner if they can. The other question the analysts will have is, well, you can't really sell a car without a steering wheel or a pedal because, it's really not allowed in many states except Texas and California. And in those states, you're only allowed to sell 2,500 each year. So how are you going to get that up in volume? Personally, I think they're going to have to add the steering wheel. They're going to have to add the pedals. Give the buyers the option, right? You can run the vehicle unsupervised, or you can actually drive it like a normal car. So, there's a lot of questions, right? Prototype, how do you get it to be road ready on time?
Yes.
All good questions.
That is a great question. Thank you for phrasing that. All right, Steve, we appreciate it. Steve Mann, Bloomberg Intelligence Senior Auto Analyst on Tesla's Cybercab launch flub, and the stock is down by over 7%.
Yeah, I like the kind of way Steve looks at it. It's like, okay, here's a car company, and there's a certain amount of value associated with that. Then there's 70% of the rest of the value, which is stuff that we think we're going to have.
I didn't know it was that much.
Yeah. Well, one could argue it's always been that. But, and in fact, you never even had 30% value to assign to a car company because they didn't sell cars up until a few years ago. So it's been a buy Elon vision thing since day one, and I would argue it still is. And there are a lot of people that are out there that really do believe his vision and his ability to get there, and there you go with the stock price. But when you have days like today, a little bit underperforming in terms of this new product line. So we'll see. Always something to talk about with Elon Musk and Tesla.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got bank stocks ripping higher. The Dow, the S&P, NASDAQ all advancing. The Dow, the S&P right now both trading at records. The outperformer today, the Russell 2000 index of small cap shares up now by 1.7%. Stocks climbing to records as big banks rally after kicking off the earnings season with solid results. JP Morgan Chase, case in point, up now by 5.3%. Wells Fargo after earnings up 5.6%. The KBW Bank Index up 3.2%, on track for the highest since April of 2022. S&P right now up 34 to 58.14, a gain of 0.6%. The Dow up 374, up 0.9%. NASDAQ up 48, up 0.3%. And again, worth repeating, records right now for both the S&P and NASDAQ. 10-year 4.07% with a 2-year 3.94%. Spot gold is surging $28 the ounce to $26.58, up 1.1%. And a retreat today for crude WTI West Texas Intermediate down 0.7%, 75.28 a barrel. And Brent, the global benchmark, back below 79 at 78.89, down now by 0.6%. Again, recapping, bank stocks surge after earnings. S&P up 0.6%, the 10-year 4.07%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube. So head over to youtube.com and search Bloomberg Live Radio. Well, we've been talking a lot, really, I'm going to say really over the last couple of 3 years, that the regulatory hand of the U.S. government's gotten a little heavier on the shoulders of big tech companies, and that includes our good friends at Google. Jennifer Reed joins us here. She's a senior litigation analyst for Bloomberg Intelligence. I like what she writes here. If the U.S. Justice Department asks Alphabet's Google to divest part of its business as a remedy for illegally maintaining monopolies in general search-related ad markets, we think the DOJ will probably fail. Jen,
yes.
What's the thinking behind that? Because there is some increasing talk here that the Department of Justice may, in fact, ask for some type of breakup of Alphabet.
Yeah, and they've suggested that they are going to ask for that. We'll find out mid-November. But the reason why I think this, and I'm sorry because I'm going to have to get a little nerdy with you here.
Yeah, bring it. I took one class.
Okay, all right, get ready here. This judge has adhered so closely to the old Microsoft monopolization decision back in early 2000. The entire litigation, he said that is his blueprint. And all through his decision on liability, he cited Microsoft, Microsoft, Microsoft. And what Microsoft says is that the standard for finding that the conduct, and here it was these default agreements that Google had to put search and basically all the distribution channels right in the internet, that to find liability, you just have to find that it's reasonably probable that these agreements contributed to maintaining the monopoly in search. But what Microsoft said is for remedy, if you're going to use divestiture, that standard is much higher. In other words, you need to kind of have a but-for standard. You have to be really certain that but for those agreements, Google wouldn't have the position in search it has today. And that this judge said over and over that Google got to this monopoly position by having a better product, not by behaving badly, but by basically innovating and making this great search product that people loved. It got to this monopoly position, and it was only after it attained that position that it behaved badly to maintain that spot. So I think given this much higher standard for what's called causation in the Microsoft case, and this judge's adherence to Microsoft, he's not going to go that far.
So that was a pretty nerdy assessment, but like I kind of got it.
Somewhat
so
nerdy,
I feel like that definitely works for me. What about behavioral remedies, and what does that mean?
Yeah, I think we're going to see quite a lot of that because the DOJ kind of threw in just about everything that's possible here. Behavioral remedies means you can or can't. We are going to make you do things or tell you you can't do things, right? It's just how you conduct your business and how we're going to tell you you have to conduct your business. So in this case, very likely it's going to be Google can't pay Apple to insert Google search as the default behind Safari. It can't pay the OEMs like Samsung making the Android phones or require them as a condition to having Google Play or YouTube or some other really desirable app that the OEMs want to pre-install. You can't condition that access to Google Play on also putting Chrome or search front and center and keeping all the other rivals in browser and search off the phone, things like that. Also, possibly some data sharing, because what this judge found is that over the years, through the volume of searches Google had, they had the scale to develop and become better, whereas Bing and DuckDuckGo and some of the other new rivals didn't have that scale and couldn't improve. And that data is super important, as well as the indexing of the web and the crawling of the web and all of everything Google did to create this great search engine. So Google may have to share some of that data with some of these search rivals to help them try to get better.
Timing. I know you guys bill by the hour, so timing's very important. This thing just screams appeals and years and years and years, but give us a sense of how you think the timing might play out.
This is going to take a long time. Okay. I mean, I don't think we see any real impact on Google soon. So the final remedies won't be decided till August. So we have a long time before we even know what the judge orders. At that point, Google will be able to appeal. They will appeal. They've already said so. And what they'll do is ask for a stay of this injunction. In other words, just freeze it in place pending our appeal. We don't have to do anything. We don't have to change anything. Usually a company does win that kind of thing, right? If we look at Epic Games versus Apple, where Apple lost on just a very slim piece of that case, and there was a limited injunction, that got stayed for almost 2.5 years. So it was issued in September 2021, didn't go into effect until this past January. So it was a long time before Apple had to do anything, and I think we're going to see the same thing here.
Does this ruling change if someone else is in the White House? I mean, even if it's President Harris and she takes a different approach to this kind of stuff, does this change?
No, it's absolutely a possibility. Okay. Now, I tend to doubt it, but it is a possibility because we will have different decision makers at the DOJ. It's very likely. And those different decision makers could just decide to discuss settlement. This is exactly what happened in the Microsoft case after Microsoft partially won on appeal, but at least the order by a trial court in that case to break up Microsoft was reversed on appeal. And later, we had a new administration, George W. Bush, and the case settled. It's possible. We have heard from former President Trump and J.D. Vance. They're both not a friend to Google. They've been pretty vocal.
It's like this is like maybe one area where both sides actually weirdly agree, but they won't say it.
I think that's right. They won't really say it, but I do think they weirdly agree. And I don't really think such a high-profile case that either one of them are going to back off and have some slap on the wrist settlement.
Remind us, what else does Google have out there that would interest you?
So we have the ad tech case too. Okay. Different markets. This is the ad tech stack, right? Demand side and sell side options for publishers and advertisers to come together and sell advertising on the internet. And that trial just ended at the end of September, and that is moving really fast. So the weird thing here, Paul, is we could have a decision and a remedy in that case before we have one in the search case. So, it's which a year ago, September a year ago, finished up. My colleague's been following that, and he does also think there will be a ruling against the DOJ on liability. But just like I see the search case, he doesn't see the remedy ultimately being a divestiture or some forced sale of, let's say, DoubleClick, which is part of the Google ad stack business. So we have that. Europe is also looking at Google. Obviously, they're looking at the ad tech stack as well. They've talked about a breakup. I'd be surprised if Europe went that far, if the United States courts don't go that far. But, Europe has a tendency to impose really, really big fines. And we've seen that, so that could still happen down the road.
Interesting.
Boy, this Lena Kine person, is that her name?
FTC, Lena Kine.
Lena Kine, yeah.
Lena Kine.
But different from DOJ.
Different from
DOJ, but she's also out there.
Yes.
And she's very aggressive, correct? I mean,
yes, very aggressive, especially in merger challenges.
Yeah.
Yeah, DOJ's been less aggressive in the merger challenge side. She has her monopolization cases against Amazon and Meta still pending, but a lot of merger challenges.
Yeah.
You have to wonder, does that continue too? I mean, in that, even if she's not head of the FTC, when we wind up getting a new president, like say President Harris takes the game, is this still a sea change in how we look at antitrust? Still a sea change of how we look at M&A versus a one-off, which I think could be something.
I think there's a change. I don't see us going back to where we were 5 years ago when it was kind of assumed most problematic deals would settle with a remedy. I just don't see us going back to that.
Yeah.
I think more aggressive antitrust enforcement has taken root, and I think it's here. Could there be some easing, a little bit of less rigidity? Yes, I think that's possible.
All right. Jenry, the best.
Thank you.
Jennifer
The
Ricci is a
best.
Bloomberg Intelligence Senior Litigation Analyst. Talk to us about Google. They've got some regulatory issues out there, some legal issues out there, and we'll see how they play out. But we are able to stay on top of that because we have people like Jennifer. That's the second lawyer we talked to today. We also talked to Elliot Stein from Bloomberg Intelligence. I mean, 2 is enough, right? Can we set like a 2-lawyer limit per day? A lot more coming up. This is Bloomberg.
Honorary degrees, presidential recognition, and the key to New York City. And on this day in 2022, he was honored with a Google Doodle in honor of Hispanic Heritage Month. That's Today in Hispanic Heritage. I'm Sebastian Escobar, Bloomberg Radio.
All right, Sebastian, thank you so very much. Really appreciate that. I'm Alex Steele alongside Paul Sweeney, Bloomberg Intelligence Radio. We're broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. Today's big take is titled How Uber and Lyft Used a Loophole to Deny New York City Drivers Millions in Pay. It's getting a lot of clicks. It's really interesting. I highly recommend that you read it. And joining me now is the author on the piece, Natalie Lung, Bloomberg News tech reporter. How did they do it?
Right. So Uber and Lyft were doing these lockouts during the summer by telling drivers, oh, the TLC, the regulators' rules, are forcing us to do this, and without notice, they're basically taking them off the app.
So the rule was that they had to be paid for every hour they were driving, even if they didn't have a fare. Is that the rule?
Right. Technically, yes. So they have to be paid not only when the passenger's in their car, but also when they're driving to the passenger, as well as waiting for a dispatch.
How do they do this, and how did it actually happen? How did you guys uncover it? How did you kind of dig into it?
So we first heard about this in June when a driver group was protesting against this and sent us evidence of drivers not being able to work when they wanted to. And so we've been reporting about this over the summer, and we heard that drivers were also locked out in surge zones, which goes against what the companies were telling us, that they were doing lockouts only in areas of low demand. So surge zones are when the companies say demand is way bigger than supply, and they would charge customers higher fares as well.
And the idea was that if they locked them out, they wouldn't have to pay them, period.
Right. It affects utilization rate, which is a key metric in the pay formula that is reviewed every year. So what they're doing is sort of trying to what the regulator calls juice up that rate before they evaluate it next year.
So you guys are serious about this reporting. Bloomberg built a WhatsApp tip line?
Yes.
Tell us about that.
Yes, so we worked with our investigative data journalist, Leon Yin.
Investigative data journalist.
Yes, and he built this WhatsApp tip line that would take in screenshots from drivers, and we know that drivers are very active on WhatsApp. They had a lot of groups sending pictures to each other already, and so this tip line got us a lot of screenshots, like more than 5,300 of them.
Oh my gosh.
Yes.
What's been the response from Uber and Lyft?
Yeah, so Uber, obviously they say this is harmful. They know this is harmful for drivers, and they basically want the regulator to sort of revisit the law and change this approach so that they don't have to do this again. And same for Lyft.
So they acknowledge that they do freeze out their drivers.
Yes.
And they say they freeze out the drivers for what reason again?
So they say it's so that they can, obviously to the drivers, they say they have to limit access because of the rules.
And the rule says you can't, if you're not, we're not going to pay you if you're just kind of going to a ride or something?
No, the rule is the opposite, that like they get paid.
They get paid.
No matter if they have a person in a car or not, if they're like on the clock, so to
Yep.
speak. So they're basically then in essence limiting the clock.
Gotcha, okay.
So what Uber and Lyft are doing though is legal, yeah?
Yeah, there's nothing in the law that says lockouts are illegal. So, which is why this is a loophole that they're using to sort of to sort of affect what happens next year.
Okay, that's so. Again, but if you're the driver, all you know is you're locked out, and I'm not able to go get a paying fare.
Yes.
So it's impacting my wallet.
Yeah, and it's very frustrating because, let's say for Uber's interface, when they were doing the lockouts in the summer, you would try to click go, which is a big blue button, and then nothing happens. Like you're expected to get pings for rides immediately, but then it just says unable to go online. Try going to a busier area. So a lot of drivers says this is the opposite of the foundational promise of flexibility of the gig economy.
How do they choose who gets locked out and who doesn't? Is it just totally random?
We don't know. Yeah, we don't know, and that's the thing. Like, there's not transparency on how long and who gets locked out.
Oh, that's really interesting. It was a great piece, guys. I totally didn't know anything about this until I read it this morning on the way in. How Uber and Lyft used a loophole to deny New York City drivers millions in pay. Natalie Lung, one of the reporters on that, Bloomberg Tech reporter, joining us on that. Record high, Paul.
Yep.
Record high. Do you have it your party hats? At one point, I think we were over 5,800. Are we still? I don't know. I'm checking. Yep, 58.15.
There you go. Boom.
Confetti?
Yeah, S&P
Party hat?
0.6. Sure, why not?
Why not?
I mean, everyone can look at the 401k after this week and feel I've had a pretty good run here.
What's so interesting, though, is that we have a lot of risk this weekend. We still don't know what Israel is going to do to respond. We also have a China meeting from Ministry of Finance, so how much will they actually issue? There's risk, and yet we still see those record highs. That wraps it up for Paul and myself on Bloomberg Intelligence. It's been quite a week. We will see you starting on Monday. Coming up, Balance of Power with Joe Matthew joining you next. This is Bloomberg Radio.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Donald Trump heads for Aurora. Welcome to the fastest show in politics as the former president uses a rally in Aurora, Colorado to highlight the need, he says, for border security as Vice President Harris is separately briefed on the cleanup and response to Hurricane Milton in Florida. We're going to have a report straight ahead from Washington here on the money drain at FEMA from Bloomberg's Tyler Kendall. And Democratic strategist Aisha Mills will join on the Bros campaign. That's what they're calling it now, the presidential race, the fight as well against misinformation. With analysis today from our signature panel, Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are along for the ride. And it's all after a look at Wall Street. We start, as always, with the markets and our friend Charlie Pellet in New York. Hey, Charlie.
the ride today with the Dow, the S&P, NASDAQ all advancing. Joe, Matthew, we are looking at records right now on the Dow Industrials up 344, up 0.8%. S&P also at a record 5814 where we stand this noontime, up 34 points, a gain of 0.6%. NASDAQ up by 0.4%. The NASDAQ 100 index has been wavering right now, looking at a gain of 0.2%. And the Russell 2000 index of small cap shares up by about 1.7%. Bank earnings Friday, 10-year 4.07%. Also PPI Friday, 2-year 3.94%. Gold up $28 the ounce, $26.58 for a barrel of an ounce of the precious metal. West Texas Intermediate crude, though slumping. WTI down 0.7%, 75.34. To be clear, it's gold that is up 1.1%. Oil down by 0.7%. As for the market outlook and the Federal Reserve, Scott Cronert is head of U.S. Equity Strategy Research at Citigroup Global Markets.
Again, we still have some uncertainty with the elections. Again, geopolitics and underlying macro conditions that are still weighing on the conditions. But all told, when you think of the Fed influence over the past 2 years now, it's very fascinating that we've seen most corporates been able to weather 2 years of a hawkish Fed pretty nimbly.
And you can hear more of that conversation on the Surveillance Podcast. You can download it wherever you get your podcast. Bank earnings, J.P. Morgan Chase up 5.1%. Wells Fargo after earnings up 5.9%. Right now, BlackRock up 3.1%, and Bank of New York Mellon is up by just about 3.1%. Actually, Bank of New York down by 0.8%. Again, recapping here, the Dow, the S&P, NASDAQ, all higher. S&P at a record up 0.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. Balance of Power continues, the Friday edition. Again, what a week it has been. Once again, your host, here he is, Joe Matthew.
Once again, we say it on a Friday, Charlie. Every week, it's so predictable. What a week it's been. Yes, we're exhausted, and welcome to Friday. You made it to the threshold of the weekend. The Friday edition of Balance of Power on Bloomberg Radio, on the satellite, and on YouTube. Find us there right now. Search Bloomberg Business News Live. We saved a seat for you in the studio, as always. Following, of course, the candidates on the trail and the president and vice president at work here following the aftermath of Hurricane Milton. Joe Biden is going to get a briefing just a little less than a half an hour from right now on actually both of them, the cleanup for Helene and Milton, 12:30 p.m. Eastern Time. The vice president dialing in virtually via Zoom. It's not really Zoom. They have a secure thing for that. But we're going to get an update from the president a little less than an hour from now, 1 p.m. Eastern Time. We did this yesterday and the day earlier. He's clearly trying, the administration, to keep a focus on information with a lot of crazy rumors around here and a lot of questions about funding. I'll tell you as well, we'll talk about it more later. Donald Trump is making his trip to Aurora, Colorado today, and we'll have a conversation about the presidential campaign a little bit more in depth later this hour. But we do want to start with the matter of funding. There have been questions about whether lawmakers should be forced to return to Washington or even asked. Everyone's home campaigning right now without a plan to come back until after November. Joe Biden did talk about this yesterday. FEMA is burning through cash. And Bloomberg's Tyler Kendall joins us right now at the table here in Washington with some good reporting on all this. Tyler, what's the situation? How bad is it?
Right. Well, Joe, the federal government is just rapidly going through its disaster relief funding. FEMA came out this week saying that it's already gone through about $9 billion of the $20 billion that are allocated for fiscal year 2025, which just started.
So we're burning through half of it already.
Exactly. And that's supposed to take the agency through September 30th of next year. But it's not just FEMA that is using disaster relief funding. The Small Business Administration has also been highlighted in its efforts when it comes to helping the federal government. The SBA provides these low-interest loans to homeowners and businesses, in some cases up to $2 million, and their funds are also getting depleted. As you alluded to, President Biden yesterday called on Congress to come back into session and provide some of this emergency funding. I want you to take a listen to how he framed it. We have that sound here.
I think in terms of the SBA, it's pretty right at the edge right now. And I think the Congress should be coming back and moving on the emergency needs immediately. And they're going to have to come back after the election as well, because this is going to be a long haul for total rebuilding. it's going to take several $1 billion. It's not going to be a matter of just a little bit.
And the SBA administrator last night actually sent a letter to Congress saying that if they don't get this emergency funding, their program will likely end by the end of next week. And experts say that's probably likely only to put a bigger drag on the FEMA funding as people have to look elsewhere for their disaster relief if the SBA loan program ends up running out.
They're said to have 2 weeks left at this point, and the bills are still adding up. So talk to me about the confusion here with the speaker. You've got multiple members, Democrats, Republicans, saying, let's do this. We're ready to come back and vote on a bill. Speaker Johnson has so far said no to that, and just through a spokesperson said, to be clear, Congress will act again upon its return in November. What's the wait all about?
Right. So the crux of the issue here is that Speaker Johnson has been saying that Congress needs to wait for the estimates to come through so that they know how much to budget for when it comes to relaying this further disaster relief. But one of the problems is that these agencies, and as President Biden has called attention to, have been underfunded. So the reason why so much money has already gone out the door is that FEMA had already run out of money earlier this year. And then once Congress gave that authorization that they could start digging into the fiscal year 2025 funds on October 1st, they essentially were reimbursing states, this back pay to many Western states that saw natural disasters earlier this year, like those record wildfires that we saw out west. The bulk of that money went to states like California, New Mexico, Texas, which had already been hit by natural disasters and were waiting for that federal reimbursement and disaster funds.
Wow. So you just said a lot there, and some of the concerns have been, by the way, that we end up having to pause relief in places like California or even Hawaii, still recovering from the wildfire there. We go into a triage mode, essentially, when we start running out of money. That could be our situation in the next couple of weeks.
Right, but the SBA has said, for example, that they'll continue to process loans up until the point of payment, so that way people can start getting in their claims and begin that process, so that once funding does come through and Congress does come back, of course, they're coming back on November 12th, something else that the speaker keeps pointing out, that now we're about 1 month away from that happening. And once they get through the election, this no doubt will be a point of topic for the lawmakers to get this relief out.
Yeah, we're not done talking about this. It does give you a peek into not just what is next in terms of the debate on the campaign trail, but we're getting a sense of what this lame duck session is going to be like, and I know you're going to be up there for it. Tyler Kendall, thank you, as always, reporting for Bloomberg, and we'll have more on the late edition of Balance of Power. About an hour from now, we'll bring Tyler back for a little bit more on this as we keep tabs on the storm here. Out in the Atlantic, of course, but still millions of people have no power. Still millions of people are hundreds of miles from their homes, having evacuated areas, and will return to find a lot of damage and likely a lot of flooding, depending on where they live. And our hearts, of course, are with them. Like we mentioned, Joe Biden is going to be briefing on the storm around 1 p.m. Eastern time. He, in fact, is being briefed himself this hour, and we'll be talking a little bit later on. Much of the conversation today is about to turn to the border. You might remember this started a couple of weeks ago, right around the same time that we were talking about Springfield, Ohio, right? The campaign starting with J.D. Vance and then Donald Trump at the debate got the whole thing going about Haitian migrants eating dogs and cats, and as he said, rounding up the geese. He's promised a visit to Springfield, but has not been there yet. At the same time, though, Donald Trump was talking about, and there was a lot of action here on social media about this, much of it unverifiable and a lot of it proven false, that somehow Venezuelan gangs had taken over the city of Aurora, Colorado. We, in fact, spoke with the governor, Governor Polis of Colorado, on this program about it. He debunked a lot of these rumors and, in fact, asked publicly that Donald Trump not visit Aurora. He's going there and will be there at 3 p.m. Eastern time to deliver remarks at a campaign event. He's going to be holding a rally in Reno later on, but this is kind of a flashpoint in Aurora in an attempt by the campaign to get our attention back on the border. There's a lot I wanted to talk about with Aisha Mills. This is where we're going to start our conversation. The Democratic political strategist and social impact advisor is back with us here on Bloomberg. Aisha, I'm happy to see you. Thanks for coming on. We talked a couple of days back about this idea of the former president visiting Springfield, Ohio, or in the case of today, Aurora, Colorado. He's talked about Venezuelan gangs taking over the town, and this is an opportunity, I guess, for the campaign to talk about border security, and I'm sure we're going to hear a lot about Kamala Harris as the so-called border czar. What is this doing to the campaign, though? And from a strategic standpoint, you know, we're not spending time in swing states here. We're going to Aurora to make what point?
You know, look, there are so many things that we could actually be talking about substantively with regards to our immigration policies generally and the root causes of migration to the United States and the economic impact of that, right? Like, there are some real conversations to be had. Kamala Harris was actually charged with thinking about and figuring out what those root causes were, trying to come up with some diplomatic approach with Central American countries, with Mexico, to be able to stem the crisis that is sending people here, and then certainly to make sure that where we need to be tough in our laws, that we are not bringing folks here who are going to do Americans harm in any way, right? That we are not emboldening sex trafficking or drug trafficking or on and on and on, right? There are conversations that I absolutely agree matter to Americans that are important to have about immigration. What we shouldn't be doing is demonizing, stereotyping people based on falsehoods and just flat out lies. And I think that, you know, that is one of the problems with the Republicans and certainly with the Trump campaign, is that they are missing an opportunity to have a real conversation about immigration in the United States, that we can all find some common ground around solutions. And instead, they are literally talking about people as if they are villains, as if they are criminals. They are making up lies about entire populations of people, and they're doing it in a way that is lifting up this trope of nationalism and frankly white nationalism that I don't think that most people agree with in this country. I think it's toxic, and I don't think that it's going to win them any favors or any votes.
I guess I'm just trying to figure the strategy here. Donald Trump says that the city has turned into a war zone. Those are the words that he used. So I went on Google earlier with producer James, and we checked out the Gaylord Rockies Resort and Convention Center, where he's going to be holding his rally later on. It's really nice. I'd kind of love to go there for a weekend, I have to admit. Aisha, what is the purpose of demonizing a city like this? He talked last evening, we'll get to this in a minute, about he was in Detroit. He's talking about, you know, how awful it would be to make the whole country like Detroit. I guess it's counterintuitive to me in a race that is so close, why we're using this method instead of talking about, say, the economy.
Yeah. Well, listen, I appreciate, you know, you doing your due diligence and homework to get a sense of where it is that Donald Trump is standing when he's actually making all of these accusations, right, and assertions about the world. Here's the thing. I live in a real community that happens to be a low-income city in America, not unlike a Detroit. We are going through a lot of evolution and changes. I am on the ground here with real people. We are walking the streets, living our lives. We understand crime. We understand education. We understand the need for healthcare, for jobs, all those things. Donald Trump is making these accusations and coming up with these false narratives from Mar-a-Lago, his mansion, from his golf courses that he owns, from beautiful hotels like the one that you see that he's going to be doing this rally out there. He is standing in a place of elitism, making accusations about what's happening on Main Street, right? A place that he doesn't actually go. And the reason why, to your point strategically, is that, look, we are 20 days out from, you know, from the actual election day. People are voting right now all around this country. And the path to 270 to be able to win this election is really at this point a turnout game. It's about getting your base out to vote. Kamala Harris is out there talking to everybody that she possibly can that is going to come out and vote for her. We're kind of outside of a place now of moving new people. And I believe that what he is doing is he's trying to stoke his base. Now, it's a very narrow swath of Americans, but they are very religiously having fealty to him and are going to show up for him. So he makes up these stories about how, frankly, brown people coming to the United States are doing harm to his base of, you know, white working class Americans in order to get them riled up to make sure that they come out and vote. And, you know, he thinks it's a winning strategy. Did it in 2016, didn't work in 2020, and I don't think it's going to work this time. All
right, let's turn to the other campaign, and that is the Harris campaign, and what Well, frankly, just broadly, Politico's labeling it the bros campaign today. They're both fighting over young men, more deliberately over young men of color. And Aisha, we heard from Barack Obama last night. He started this series of events he's doing next 4 weeks for Kamala Harris in Pittsburgh. Listen to this sound of the former president speaking to young men about their perceptions of Kamala Harris.
Part of it makes me think, I'm speaking to men directly, part of it makes me think that, well, you just aren't feeling the idea of having a woman as president. And you're coming up with other alternatives and other reasons for it. Anybody you are talking to in a barbershop, anybody you are talking to in your house, in your family, at church, who is coming with that kind of attitude, I think you have to ask them, well, how can that be? Because the women in our lives have been in our backs this entire time.
That might have been a little bit difficult to hear. He was at a campaign headquarters there speaking a bit off mic. That you just aren't feeling the idea of a woman as president, he said. Aisha, how real is this?
I think that's very real. It's very real. Look, we have not had a woman president in the United States. And when you listen to the rhetoric that is happening on one side, it's really a hearken to whatever Make America Great Again means. But it's this idea that women are subservient, that women shouldn't have bodily autonomy, right? The assault on abortion rights is really an assault on women's ability to manage our own health care, that women who don't have children and a husband are useless and have no purpose and nothing to live for. These are things that are coming out of the other side. There's a real sexism and a real patriarchy that are still part of the undercurrent of our society, whether we like it or not, right? Whether we want to admit it or not. And I think what Barack Obama is saying, and what he's always said, having been raised by a single mother, is like, look, we've got to remember that the women in our lives have raised us, supported us, are the ones who are out there in the world, more than half of the population of America, by the way, doing the hard work in order for us to be great. So why would we have any blink of an eye about a woman leading this country as president of the United States? It's an important conversation to have because there are so many other messages that are being pushed to suggest that women's place is only in the home and that if she's single and has cats, then she is useless and, you know, not healthy for society and that all she should be doing is raising kids, when in fact that isn't true. And so that's what you're hearing, this appeal to men to be reminded that men, you know, you have mothers, you have sisters, many of them have daughters themselves, that the world moves, their world moves because of women and because of the strength of women. And certainly we can have a president that's a woman.
Well, look at the Trump strategy here. This is, I mentioned the battle for the bros. This is Politico writing. They refer to the Nelk boys. Producer James had to tell me who that was. Pro-Trump millennial pranksters with more than 8 million YouTube subscribers. These guys do like college drinking games or whatever on YouTube. Launching a multi-million-dollar voter registration campaign, Aisha. They plan to capitalize on college football game tailgates, gaming sites, male-friendly podcasts, even Tinder. And another podcast I can't even read on the air. He's going for broke on this. What's Kamala Harris doing?
You know, listen, but let's talk about that going for broke, though, because it's such a broken sense of masculinity and bros and who bros are, right? Like when you look at the men who are present on either side, the Democratic ticket or the Republican ticket, when you look at who Donald Trump is advertising to with all of that, their conversation is very much a patriarchal, old school, like man that does locker room talk. Right? That, you know, is held liable for sexual assault because you should be able to do whatever you want to a woman. Right? And it's all just locker room talk, saying nasty things, being a bully, really. On the other side, you've got Doug, Kamala's husband, right? Who's a kind, compassionate guy, who's a father figure. You've got Governor Walz, Coach Walz, who is a veteran, and also a coach and a teacher and tender and kindness. So I think that this idea of a bro is really something that's on the ballot right now. The definition of a bro is it Ted Lasso, who is a kind, compassionate football guy, right? But someone who is tender.
I don't think that's who they mean.
It's not who they mean. And that's the thing that's going to be on the ballot is this: do we want a small segment of the population that still thinks that we should have locker room talk and be bullies and nasty, and that's who they're appealing to? Or do we believe that like men are decent, kind, respectful, wholesome humans, right? We'll see how that plays out. But that's who they're going after with those ads for sure, is that small segment of the bully population of bros.
Are we getting Ted Lasso on, James? I feel like that would be a great show. Are we working on that?
Ted.
Come back, Aisha, when Ted Lasso's on. Great to talk to you, as always. Aisha Mills, Democratic political strategist, social impact advisor with us on Bloomberg. We got a lot more ahead here. We're going to bring you up to date on what's happening abroad today. Latest from Israel, latest in the markets, too. Charlie helps us with that, but also we've got earnings season starting today. This is actually kind of a big deal. Our signature panel's in place for later. We'll talk to Rick Davis and Jeannie Shanzano. Right now, it's my bro, Charlie Pellet, standing by in New York with his eyes on Wall Street. Hey, Charlie.
Well, hello there, Joe Matthew. Bro, indeed, with the Dow, the S&P, NASDAQ all advancing right now. We're looking at records. We'll have more on the markets coming up in just a moment with our Abigail Doolittle. But right now, right to the numbers, the S&P up 27, above 5,800. Look at that on this Friday. Not just a bank earnings Friday, but also PPI Friday, 5807, where we stand right now. Looking at a gain of 0.5%. The Dow up 274, up by about 0.7%. NASDAQ is advancing 48 points, up by about 0.3%. Cannot ignore the Russell 2000 index of small cap shares. It is up now by 1.6%. 10-year 4.07% with a 2-year 3.94%. Gold surging almost $30 the ounce to $26.59. That is a gain of 1.1%. A retreat, however, for West Texas Intermediate crude down 0.4%. 75.53 for a barrel of WTI. Bitcoin rallying 4.1%, 62,189. Bank earnings front and center. JP Morgan Chase up 4.9%. Wells Fargo up by 6.2%. Uber and Lyft both rallying after Tesla's Elon Musk offered few details on the carmaker's plans for a self-driving service that could compete with ride-hailing. Right now, we've got Tesla down 7.8%. Uber and Lyft very much in the other direction. Uber up 9.6%. Lyft right now up by about 10.6%. Recapping, key takeaway at this hour, stocks at records, both for the Dow and the S&P. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie, thanks so much. As Charlie mentioned, we're going to talk a bit later on this hour with Abigail Doolittle to mark the start of earnings season and see just exactly what this Trump trade, Harris trade business is all about. I haven't been hearing so much about either of them lately. I also want to point ahead to an important conversation in our second hour. It'll be a little more than an hour from now. Scott Bessent is going to join us, Donald Trump's very close economic advisor. A lot of people like to think that he would be Treasury Secretary. Maybe even he likes to think in a Trump administration. He's going to join Kaylee and I here at the table in our second hour when we welcome our global television audience to the conversation. Yom Kippur is upon us, and we've got our eyes still on Israel with a prolonged wait at this point for a response to Israel. Joining us now is Dan Flatley, a response to Iran, I should say. Dan has been watching along with us from our national security team here in Washington. We've made it to another Friday, and we're still waiting for something to happen here. But we've seen quite a bit of fighting continue in Lebanon, continued airstrikes against Beirut. They're balancing both of these at once still, aren't they?
Yeah, Joe, you know, it's interesting. I heard a commentator say the other day that one of the most interesting things that's happened in the Middle East over the last several years has been the stepped-up strikes in Lebanon by Israel. Particularly, obviously, we had the pager explosions and the walkie-talkie explosions. Now we've had airstrikes. It seems like if we weren't waiting with bated breath for this response to a direct attack on Israel, for Israel to respond with a direct attack on Iran, we'd be talking about what's going on in Lebanon as being a strategic move by Israel to really strike at what Iran believes is its premier proxy force, which is Hezbollah. So it seems like they're taking some of Israel is taking some of their aggression out on Hezbollah. while we wait for a direct response, which, honestly is probably going to be more symbolic at the end of the day than it will be strategic, or than it will have a military impact on Iran's ability to continue strikes on Israel, or to continue some of its support for proxy forces in the area. So we're expecting, based on some conversations that have happened between the U.S. and Israel, that Israel will stick to military sites and will not go after energy infrastructure or things of that nature. So that's kind of the state of play at the moment.
Now, I know that's what Joe Biden wants, the administration, who I guess is putting some pressure on Israel to do just that. Do we have any reason to believe that is how this ends?
I don't think that this is not going to end, with any sort of final moment.
Fair enough,
here.
understood. But no attacks on energy or nuclear. Is that fair? Would you be surprised if that happened?
I would be surprised if that happens at this point, because if you looked at what happened in April, Israel's response was confined to a military site.
Yes,
and I think the idea here is that because there were, that Israel was able to thwart this ballistic missile attack, that a proportionate response would be to target something that would prevent Iran from carrying out a similar attack in the future, or at least degrade its capability to do that. Not to go after nuclear sites, not to go after energy infrastructure or things that would have potentially some civilian casualties attached to them. So I think that is what the U.S. wants, as you said. Whether Israel actually acquiesces to those demands is another question. They haven't been willing necessarily to listen to everything that the U.S. has said up to this point, although they did listen to the U.S.'s advice in April in response to that. So I think that when you get to the direct strikes on Israel by Iran and by Iran on Israel, you're talking about a very serious level of response and a very serious consequences.
Yes, right.
So I think there's a willingness to be a little bit more cautious when it comes to that type of thing.
We spent a lot of time surging assets into the region. Do they stay indefinitely until we see the next phase here?
I think there's probably a long tail for their presence in the region. This and the surge, let's keep in mind, did not happen overnight, right? So after October 7th of last year, you began to see a slow buildup of U.S. forces in that region, and that's not without precedent. I mean, that happens from time to time based on what's happening on the ground in the Middle East. But as the Houthi strikes in the Red Sea began to ramp up, as you had additional activity in that region, you saw more buildup and more buildup. And again, we talked about the other day, there's a debate as to, whether this keeps a lid on tensions or whether maybe it increases tension because it gives Israel sort of the backing of the U.S. And sort of a feeling that if they wanted to be more aggressive in some of their responses, they could be, because they have those assets there that they can rely on. And we know the U.S. has helped respond to some attacks by Iran on Israel in the recent past. So, I don't know where you ultimately come down on that, but certainly I don't think that those assets are going to leave the region anytime soon. I could see, even if fighting ceases in Lebanon and in Gaza, in the next 2 or 3 months, those assets will be there for 6 months or so, maybe longer. You can't turn a aircraft carrier on a dime. Once you get these assets into motion, yes, they can respond quickly if they need to, but I think you're likely to see them remain for a while.
Great to have you back. Dan Flatley from our national security team here in Washington. He's on call every weekend for this very reason as we wait for news to break here. Good thing you served as a Marine. I'm Joe Matthew in Washington. Thank you for joining us on the Friday edition of Balance of Power. Yeah, it's the 11th of October, and you know what that means around here. I feel like we should have noisemakers or something. It's the start of earnings season. Yeah, big stuff. Big enough to have Abigail Doolittle along with us. Bloomberg Markets reporter joins now from New York. Abigail, it's great to see you. We spent so much time talking about the Trump trade and the Harris trade. Then we started talking as well about the geopol trade. We've got our eyes on oil here in Texas. It's still hovering above $75 a barrel as we wait with all of this noise Talk to us about the impact of earnings and what we should expect here in the next couple of weeks.
Well, right now, Joe, we are taking a look at a pretty positive start to an earnings season. The heart really kicking off, as you mentioned today, with the big banks reporting. JP Morgan and Wells Fargo both reported their third quarters, and investors are liking what they see. JP Morgan up more than 4%, the best day since April. Wells Fargo up more than 6%, the best day since February. Now, Wells Fargo, they beat earnings. They missed sales ever so slightly, but they had a really strong contribution from the investment banking division. So investors liking that. I would say the big thing going on here today, though, Joe, is JP Morgan. So this stock was all over the map in the pre-market, but they put up a big net interest income beat. And if you recall, a few weeks ago, their president, Daniel Pinto, just a few weeks ago, was talking down the idea that the street might be a little bit too high on that. Well, now they beat. A key guide is above what the street was expecting. So it seems as though those nerves that we saw a few weeks ago for these bank earnings, well, they've been smoothed out by these results, JP Morgan in particular.
All right. Well, we've had something like, 44, 45 record highs on the S&P 500 here this year. It's a market, I guess, I won't say price for perfection, but is expecting a lot out of this earnings reporting season. How would you describe where the bar is set here?
That's a great point. The bar is set very high. Forward earnings on the S&P 500 trading at 23 times, relative to the 10-year average of closer to 17 times. So valuation is certainly rich. As you mentioned, many record highs behind just 2021 when there were 70 and 1995 when there were 77. The interesting thing about this earnings quarter, so the market expectation, where the market is priced to perfection, that's very high. But the earnings growth expectation itself, it's somewhat weak. It's 3.2% earnings growth for this quarter. That's down from about 13% in the last quarter, and it's also down from the expectation of about 10% in the fourth quarter. So it almost feels like investors are giving this quarter a pass. And because this is balance of power, yes, I am going to make a bit of a crosshair, that intersection between business and politics. I think that there is some uncertainty around the election. In fact, I don't know if you heard this, Joe, you probably did, but Delta Airlines yesterday, one of the reasons that their guide, their results were slightly weak, they were saying people are not planning on traveling around the election.
That makes no sense to me. What do you make of that? What are we afraid of? You're not going to go to the beach because of the election?
It is strange commentary, and from the standpoint of having watched markets for a while, the real piece of news that seemed to weigh on results, I think to the tune of 45 cents per earnings per share, and I think it was $388 million, was that CrowdStrike cybersecurity tech blip that caused so many flights. It almost felt as though they were bringing this color in. This morning I heard another travel expert or a travel expert speak here on Bloomberg saying that they've not seen anything along those lines. Maybe international travel would be down a little bit because folks want to be in the United States to be able to vote, but it was strange commentary.
Or avoid some sort of weird backlash. Look at CrowdStrike too. See, I could do this all day long with Abigail. It's back above the 200-day. It's not back to where it was, but thank you. See, I'm learning as we go here. This has been pretty resilient. People are getting back on board.
They are. In fact, I think it was RBC. It might have been another investment bank, but yesterday saying CrowdStrike is one of the best software plays out there. So after that big drop in July into August, that seemed like it would never stop. Now analysts saying, don't throw out the baby with the bathwater. This is a good company. They did have that issue, but that's in the past. Valuation attractive.
Hey, we're less than 4 weeks out, Abigail. Let's do this a little more often because the reluctance to trade could become more pronounced as we get closer, or maybe we're taking advantage of volatility. Either way, it's an important market story. What's going to happen on November 5th and how many days we wait for this race to be called. Our panel is next. This is Bloomberg.
12:40 on Wall Street. We do check markets all day long here at Bloomberg. Bank earnings Friday. Bank stocks are surging. The Dow, the S&P, they are at records, and we've got NASDAQ pushing higher. Stocks hitting records as big banks rally after kicking off the earnings season with solid results. S&P up 25 now to 5805, trading above 5800, a gain now of 0.4%. The Dow up 282 points, up by about 0.7%. The NASDAQ Composite Index up 36, up by about 0.2%. 10-year at 4.07%, the 2-year 3.94%. Gold is now advancing $29 the ounce to $26.59, up 1.1%. And West Texas Intermediate crude down 0.7%, $75.29 a barrel. So records for the Dow and the S&P. As for the market outlook, Priya Misra is fixed income portfolio manager at JP Morgan Asset Management.
We have an election in less than a month out, and I think we can debate the makeup of Congress, the presidency, but fiscal restraint is not something either party is talking about. Even in a divided government scenario, I think there's a case to be made that the taxes will get extended, a lot of the spending will continue.
Priya Misra of JP Morgan Asset Management, and you can hear more of the conversation on the Bloomberg Intelligence podcast. You can download it wherever you get your podcast. After earnings, JP Morgan Chase surging now by 4.9%. Wells Fargo after earnings up 6.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thanks. We'll hear more from Charlie Pellet a little bit later on this hour as we track markets on this start of the earnings reporting season. Welcome to the fastest show in politics. We're glad to have you today on Bloomberg Radio, here on YouTube, where you can always find us. If you haven't yet, search Bloomberg Business News Live. We'll meet you there. And, of course, to our friends on satellite radio. Welcome to Friday. You made it to the threshold of the weekend. The candidates back out. Kamala Harris coming off the Univision town hall last evening, and Donald Trump coming off his visit from Detroit. He's going to Aurora, Colorado today, having spent quite a bit of time talking to the Detroit Economic Club. It was a 2-hour stem winder, and about an hour and a half into it, we got the headline on tax policy, another exemption or deduction, in this case, your car insurance payments. He was in Detroit talking about the auto sector and Detroit itself, which he is apparently not a big fan of. Here's the former president from yesterday in Detroit.
I don't think anything that we're talking about today is high on our list. The whole country is going to be like, you want to know the truth? It'll be like Detroit. Our whole country will end up being like Detroit if she's your president. You're going to have a mess on your hands.
Hello, Detroit. Gretchen Whitmer, the governor of Michigan, quick to respond on Twitter. Detroit is the epitome of grit, defined by winners willing to get their hands dirty, she writes, to build up their city and create their community, something Donald Trump could never understand. She says, so keep Detroit out of your mouth. And you better believe Detroiters won't forget this in November. I wonder if that's true. Let's assemble our panel. We'll bring you into the Univision Town Hall as well as we follow both presidential candidates. Jeannie Shanzano and Rick Davis are here. Our Friday signature panel, Bloomberg Politics contributor. She is political science professor at Iona University. Rick, of course, is partner at Stone Court Capital. What do you think of the strategy, Rick? The candidate rolls into Detroit and promptly insults the city. He's hoping we'll vote for him.
Yeah, I mean, his audience is outside the city. He's certainly not, playing to the folks sitting in the room. Even though, I mean, my recollection of the event is they applauded when he said that. So who the heck are these guys sitting in there from Detroit, thinking that that's a good idea? But the reality is that, he's painting America as, a dwindling, nasty place. It's dirty and crime-ridden, and so he didn't expect to win a lot of votes in Detroit, but he expects to win a lot of votes in those suburbs and exurbs and rural areas around the state. So he's kind of painting that picture that I think some people may appeal to, and certainly his base will rally around that because they believe what he says, which is the country is descending into this turmoil, and you don't want it to look like Detroit. And I think most of his voters would agree with that.
I don't know if you're a big fan of Detroit, Jeannie, but about 90 minutes into the 2-hour speech, Donald Trump got to some news. He's still proposing new tax ideas, in this case, another deduction. He wants to make car loan interest payments tax deductible and says that will, quote, stimulate massive domestic auto production to make car ownership dramatically more affordable, unquote. If that's true, who cares what he thinks about Detroit? Is that the idea?
I think that's the idea. You know, listen, he did the same thing right before he went to Milwaukee, right? And it didn't hurt him that much. You know, for his support, this is part and parcel of the Donald Trump. They know, and they you know, take what he says, and they don't take it to the bank the way some people do. You know, and in terms of this policy, you know, the question is, of course, how do we pay for all of these programs that he has decided to play Oprah and keep handing out to people? I mean, you know, the interesting thing is, you know, Republicans often accuse Democrats of doing this, but Donald Trump is doing this. And the question is, how do you pay for this? And of course, we know what at least economists tell us is that he is going to add about $7.5 trillion to the debt and deficit. But I guess in the waning weeks and days of the campaign, he's less worried about that and more worried about attracting people to his side.
Well, today he's going to be in Aurora, Colorado, as I mentioned. Producer James got a peek at the set on the stage here, the backdrops. We've got signage that says "Deport illegals now" and "End migrant crime," as we kind of stick with this more, well, I guess, dark view of America, as Rick suggests. That's working with a lot of people. And it's an interesting contrast when you look at the different ways these candidates are trying to appeal to undecided voters. Let's go to Las Vegas last night, where Kamala Harris took part in a Univision town hall. This was like a crier, Rick. I don't know if you saw this. You bring the tissues. I mean, honestly, she's had some pretty emotional exchanges with some of the people who were there. Let's have a taste.
The first bill we offered within hours of taking the oath was a bill to fix the immigration system, including creating a comprehensive, earned pathway to citizenship for hardworking people. And it was not taken up. And now we look at a situation where people are suffering. Real leadership is about solving problems on behalf of the people. And I'm so sorry for what you've been through. I'm so sorry for what you've been through.
Rick, that was the daughter of an undocumented immigrant. Her mother died 6 weeks ago, she said, because she couldn't get the care that she needed as an undocumented immigrant living in this country. She had a cry with the vice president there. It was an emotional moment, and there were a number of those last evening. Which is more potent right now? And I ask you that because voters want answers, they want ideas, they want to know about how these candidates are going to fix the economy. And you've got Donald Trump going to Aurora talking about Venezuelan gangs today, and you've got Kamala Harris having this touching moment with voters. The contrast couldn't be more stark. What's going to work in the end?
You know, it's hard to say. Fear is an incredible motivator politically. And Donald Trump has used it successfully, both in 2016, where he, again, painted a very dark picture of the country, and almost successfully again in 2020. So that's his playbook. It's impressive to see, actually, Harris going the other way, because the reality is empathy, which comes right out of the Joe Biden playbook, is a personal trait that I think voters like, but it has to be attached to the ability to get things done. You know, they think it's nice that the president, future president, would be empathetic to their concerns. Certainly, a lot of that's happening right now related to these natural disasters. But the bottom line is, I think voters right now are trying to gauge who's going to deliver for me in the next 4 years. And that is the big, I think, you know, vexing question right now going into an election. And voters today are voting in a dozen states just on that question of who's going to deliver for me personally in the next 4 years.
I have to admit, and I don't want to go somewhere I shouldn't here with Rick, Jeannie, but it kind of reminded me of the John McCain moment. He was pretty darn good at that, too. You remember when he was asked by a McCain supporter about Barack Obama? Remember, no, ma'am, he's a decent family man. That could be a pretty attractive quality. Rick, do you see that coming out of the same vein? How does that resonate with voters?
Yeah, look, I mean, it probably has had a bigger impact on the John McCain legacy since the election. I find people remarking about it literally every day that I'm out there talking to folks.
That moment.
But as far as something that impacted the election at the time, I think it was a nice to do, but I don't think it moved the needle. Because everyone, I think, already had the view of John McCain as that kind of guy, right? You would expect him to have that reaction. He's built his entire political career on integrity. This is more important for Kamala Harris because people don't know her, and they aren't necessarily comfortable right now with her. And so it is a very important aspect of her campaign that every single day she's out there campaigning, that she elicits some kind of an emotion from voters because she's painting that picture for the first time. So I think this is the advantage of being a fresh candidate is, you get to paint the picture you want. The bad news is you have to do it every day. And I think we're going to see how that balance works out. But I have noticed that, if Donald Trump is not out attacking Kamala Harris every day, nobody else is. There's no surrogate operation that the Trump operation is putting forth that's keeping the heat on her. So she does have an opportunity in a relatively good vacuum in these swing states, which he's not going to paint that picture of herself.
I will let everyone know it's about an hour from now. In fact, we'll be wrapping our conversation with Scott Bessent, Donald Trump's close economic advisor, who has come up with a lot of the ideas that we have described here on Balance of Power. Jeannie, Kamala Harris was pressed on prices. Inflation was a topic, a lot of household issues in this Univision town hall. And she got back to, some of the greatest hits that we've heard, the price gouging piece, housing incentives. Is that a complete enough answer for undecided voters?
She's got to keep hammering on them. It is such a tough media market for these candidates to break through. You need to say something that is going to allow you to own this news cycle, and that's tough to do. So I thought her answers were okay, but as we think about it from a purely political standpoint, both of these candidates are going after just about 1.5 million Americans. That is it. They are a group of Americans who are undecided. So they either fall into one of two buckets. Either they don't know who they're going to vote for, in which case they want more information, or they just don't know if they're going to vote. But if they do vote, they know who they're going to vote for. And so she has got to appeal to both, but it's that first bucket she's got the biggest chance with. Those are what some people call the Nikki Haley voters. And that means she needs to keep underscoring what her plans are. And more importantly, she needs to go on the offensive against Donald Trump. And that is a tough thing to do at this point, but he is doing it against her. She's got to flip that switch as well. And she's got to do it with a smile on her face because everybody wants Kamala with vibe back. So it's not an easy thing to do, but that is what she needs to do as she's out there right now.
Well, I'll tell you, you know how often the storyline changes over the course of a day here. Rick, we've only got about a minute left. Donald Trump's going to be in Aurora, Colorado around 3 o'clock talking about Venezuelan gangs in what many supporters see as a highly anticipated moment here on the campaign trail. What will be the conversation by the end of the day? Do we turn back to border security?
Sure. I mean, he's going to keep pulling us back to that. I mean, he's on a swing through the Southwest and West, and that's going to be his primary theme throughout this tour through Colorado and Southern California and Nevada. So we can expect a full dive of that. And by the way, I think that's his closing message. I think they found what motivates their base, especially white males without college educations. They're going to feed them a diet of immigration dogma between now and then, and it's only going to get worse. I mean, like every stage he stands on is going to be one, undocumented story after another of how the U.S. is descending into the abyss because of illegal immigration.
We'll have more on this coming up in our next hour. Rick Davis and Jeannie Shanzano stay with us. Hour 2 is on the way as we welcome our global television audience to the conversation. We'll be joined by former FEMA Deputy Administrator Daniel Kaniewski. And as I mentioned, Scott Bessent will be here to dig deeper into the Trump economic plan. It's all ahead on the fastest show in politics. This is Bloomberg.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
2 million still without power. Now the recovery begins in Florida. Welcome to the fastest show in politics as President Biden prepares to address the nation after being briefed himself on the response to Hurricanes Helene and Milton. I'm Joe Matthew alongside Kaylee Lyons here in Washington. Welcome to the Friday edition of Balance of Power on Bloomberg TV and radio. Kaylee, this has, of course, brought up a lot of big questions about funding for FEMA, the SBA, and other organizations that are trying to help people in the storm zone.
money by next week, according to officials. FEMA, of course, seeing its own resources rapidly depleted by what have been two massive storms that are going to require massive response. We heard President Biden say he thinks Congress should return to Washington immediately to address funding needs, but no sign that that is actually going to happen.
We did hear from Speaker Mike Johnson, at least through a spokesperson last evening, not going to happen, at least not yet. And we're going to get an update on the funding situation. We actually have some real reporting on this coming up from Bloomberg's Tyler Kendall in a conversation with a former deputy FEMA administrator, Daniel Kanuski, about this very busy time for an agency that's straddling recovery efforts across multiple states. In the case of this political program, multiple swing states.
Well, that's exactly right. These recovery efforts happening in tandem with the final weeks here of a presidential election cycle. So we'll have more on the political implications as well with our signature political panel this hour. And we're going to speak with someone very close to former President Donald Trump. One of his key economic advisors, Scott Besson, will be here with us in studio.
I've been looking forward to this. We got another a tax deduction floated yesterday by the former president before the Economic Club of Detroit. But Kaylee, as we know, this is the man who has Donald Trump's ear on so many of the proposals that we've been talking about for weeks here. It'll be fascinating to sit down with him and get his take.
Indeed. So all that's ahead this hour. But let's begin, as always, with a check on the markets. Charlie Pellet has the look from
Thank you very much, Kayla Lyons. Big day for the market. We are looking at bank earnings on this Friday, PPI as well, lots of eco data. But we've got the Dow and the S&P both trading at records right now. NASDAQ pushing higher as well. Perhaps to stand out, the Russell 2000 index of small cap shares up now by 1.6%. To put that all in context, S&P higher by 28 to a record 58.08, up now by about 0.5%. The Dow is advancing 310, up by 0.7%. Also at a record, NASDAQ up 45, up by about 0.2%. 10-year at 4.06% with a 2-year 3.93%. Spot gold up 1.2%, $26.60 the ounce, and West Texas Intermediate crude retreating now by 0.5%, $75.42 a barrel. All about bank earnings today with J.P. Morgan Chase reporting a surprise gain in net interest income for the third quarter. JPM up now by 4.9%, and Wells Fargo posted third quarter profit that topped analysts' expectations. Wells Fargo shares, they are gaining now by 5.9%. So again, recapping, stocks are advancing. The Dow and the S&P both are at records. S&P up 28 now, a gain of 0.5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington once again. Your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Taking a look at the end of the trading week here on what is Friday, October 11th. But the date we're focusing on is November 5th, of course, the election, and November 12th, because that is the date that Congress returns to Washington. And this town gets a little less empty. It's just Joe Matthew and I seem to be here at the moment. But that is the return date. Set in stone. The Speaker of the House, Mike Johnson, says that he is not planning to change that, despite President Biden saying yesterday he thinks Congress should come back immediately to address the emergency funding needs that have emerged because of these massive hurricanes that have hit the U.S. Helene, of course, and then Milton after that this week.
The word from Mike Johnson so far remains no. We did hear from Athena Lawson, spokesperson, last evening. To be clear, Congress will act again upon its return in November, so we'll keep that 12th, circled on our calendars here. There are still a lot of questions, though, about how much money FEMA has to work with here when it comes to individual assistance, public assistance. The SBA, as we heard from Joe Biden last evening, is a completely different ball of wax here, and that's where Tyler Kendall comes in. I want to bring you into our newsroom in Washington with Bloomberg's Tyler Kendall and some reporting on exactly where the funding stands for these agencies. Tyler?
Yeah, hey, Joe. The federal government is rapidly using its disaster relief funding. FEMA came out earlier this week saying that it had already gone through about $9 billion of the $20 billion in congressionally allocated funding for fiscal year 2025, which just started and is supposed to take the agency through September 30th of next year. But as you mentioned, it's not just FEMA. The Small Business Administration has been highlighted in its role for helping the federal government when it comes to disaster relief efforts. The SBA provides low no-interest loans to homeowners and businesses, in some cases up to $2 million to rebuild after natural disasters. And as you mentioned, President Biden, yesterday, as we wait for him today to address the nation, yesterday he came out and urged Congress. I want you to take a listen here to what he said to lawmakers when it comes to pushing for that additional emergency funding.
I think in terms of the SBA, it's pretty right at the edge right now. And I think the Congress should be coming back and moving on the emergency needs immediately. And they're going to have to come back after the election as well, because this is going to be a long haul for total rebuilding. It's going to take several $1 billion. It's not going to be a matter of just a little bit.
In a letter to Congress last night, the SBA administrator said that emergency loan program will likely run out by the end of next week if it does not have additional funds to replenish it. They did say that the SBA will continue to process loans, though, up to the point of payment. But Joe and Kaylee, experts are saying that once that SBA loan program runs out, that's only going to put a bigger drag on the FEMA funds as people look elsewhere if they can't get that SBA funding.
So as we consider the role Congress has in providing more funding, the argument that lawmakers who are not eager to return to Washington right now, Tyler, is that it's because it's campaign season. They're in the final stretches of their own races ahead of Election Day. But that kind of is an important point here. It is the last weeks before the election. This storm and everything that comes with it might have massive political implications, including the ability of voters to vote at all.
Right, exactly. You two have been covering closely how the storm and electoral politics have kind of been intertwining here. We've been talking a lot about rhetoric at the top of the ticket, but I would also say I'm watching voter access, for example, in some of these hard-hit states, including battleground states like North Carolina, where we're already seeing them implement some emergency provisions to allow for mail-in ballots to be more easily attained if you are in a disaster zone. Even in Florida, Florida's Governor Ron DeSantis, for example, is reevaluating some of the polling sites to make sure that they're in accessible areas. And then beyond that, as we've been covering, the economy is always repeatedly the top issue according to our Bloomberg News Morning Consult polling. And we're going to be watching how the economic impacts from the storm could impact voters in some of these key states. For example, if you look at Florida, a lot of those key ports, like the Port of Tampa, the largest port in the state, being closed, how that's going to impact supply chain issues, taking us right up to Election Day.
Very good point. Bloomberg's Tyler Kendall, great reporting. Thank you so much. And Joe, it is something to consider here, the optics of all of this, let alone the actual physical, tangible impact on ability of people to vote and that kind of thing. The optics of the response, how federal officials and other elected members of office respond to this, including whether or not they return to Washington, could be something very impactful on the ultimate vote just weeks from now.
Well, that's for sure. And if the speaker holds the line on this and we wait for everybody to come back after the election, we are really getting a good sense of what this lame duck session is shaping up to be. We knew it would be an emergency request. A lot of folks thought it might be for the Pentagon. Looks like it will be for a disaster relief once again.
Indeed. So for more on the disaster relief that's needed and the kind of funding issues we seem to be running into again and again, we're pleased to be joined now by former FEMA Deputy Administrator for Resilience, Daniel Kanuski. He is now Marsh McLennan Public Sector Managing Director, and he's here with us in our Washington, D.C. studio. Thanks for being here.
Thanks
on Balance of Power. As we consider this funding question, the idea that FEMA now, after these two storms, may not be in a very strong position to respond to anything else that could come this hurricane season or any other disasters because of the extent to which resources have been depleted. How great of a problem is it that we even have to consider these vulnerabilities in the first place?
Well, certainly the two hurricanes back-to-back have strained FEMA's resources. It's strained its budget, it's strained its personnel, and it's strained its ability to respond effectively to future disasters. Now, knock on wood, let's hope that there's not any major disasters that happen right now, but assuming not, we're really, they're going to be really focused on that recovery and prioritizing all of those resources, whether they be personnel or funding, to those two major disasters. But let's not forget, there are many other disasters that FEMA is still on the ground for, still helping communities recover from. Those disasters number in the hundreds.
So to that end, that's exactly what I wanted to ask you about. Are we 2 weeks from now playing triage with money and turning away from recovery from fires in California or in Hawaii, for that matter?
Well, the FEMA administrator does have the authority to prioritize those immediate needs, and that there is precedent for that. It's happened several times, even recently. So I would expect that if funding started to get lower than what the FEMA administrator felt comfortable with, she would prioritize funding for those immediate response needs with the 2 disasters we've recently experienced. Now, long term, you're absolutely right. Like the concern would be that those communities that are still recovering from those disasters that were weeks, months, even years ago, are going to be slowed down in their long-term recovery, in their ability to bounce back from those disasters and build resilience. So certainly a concern, but prioritizing the current response needs would be the priority.
Well, as you mentioned, resilience, which of course is what you focused on at FEMA, to what extent is this conversation one that needs to be had, not just about making sure enough money is there that you aren't constantly having to request emergency supplementals, but also that adequate investment is being made in resilience, in mitigation, in adapting to a climate that is changing, and storms that we have seen can grow more powerful over warm ocean water, for example?
Well, certainly resilience needs to be a priority. And I'm so heartened that FEMA is now largely known as the Disaster Resilience Agency. It wasn't always that wasn't always the case. Quite frankly, it was always known as this agency that would provide funding and support after disaster, which is absolutely critical. But in those times where we're not experiencing a disaster, FEMA and the Emergency Management Committee should really be focused on investments that can reduce future disaster losses.
Well, are we in a world in which funding should increase along with the temperature?
Well, I think that no question funding will have to increase for funds like the Disaster Relief Fund, which needs to constantly be replenished based on these large disasters.
Yeah.
There is an increasing amount of funding being spent on the pre-disaster programs. And again, that is the right direction to go, because we know that for every $1 invested in risk reduction programs, it saves $6 when a disaster occurs. And that's just the savings to the federal government. Wow. If you layer on top of that the economic savings, thanks to a recent report by Allstate and the U.S. Chamber of Commerce, they found that number is actually 13 to 1.
Do you feel like lawmakers in Washington recognize that, or is this just something that happens in the agency?
I think it was, let's go back to 2017 when I was at the agency. We had back-to-back hurricanes Harvey, Irma, and Maria. And policymakers, to their credit, came to us and said, what can we do to prevent this in the future? What can we do to lessen the impact on taxpayers and lessen the impact on disaster survivors? And we said, give us a pre-disaster hazard mitigation program. Let us invest ahead of time before that disaster occurs. And that report from the National Institute of Building Sciences, that 6 to 1 number, had just come out. So it was really the confluence of that data, right, empirical data that says mitigation saves, combined with those increasing disaster losses.
How quickly does it save, though? I mean, if we're talking about these kind of investments and rethinking the way you build, perhaps where you build, the kind of infrastructure required to better withstand these natural disasters, you can't just do that overnight, right? This is not something that's going to change the game for hurricane season 2025.
That's right. It will lessen the impacts of that future disaster. So in the interim, there's a number of steps that can be taken. 2 I'll mention: preparedness. So being prepared to effectively respond to that disaster, realizing you can't reduce that disaster risk to 0. And you've seen communities that are prepared and those that are less prepared. There are federal dollars available to help those communities prepare. The second point I would make is insurance. Insurance fills that gap, right? It fills the gap between that level of preparedness or the risk being fully mitigated and the disaster that's inevitably going to occur. So everyone needs to have insurance. The homeowners, governments need to have it. And that insurance is what protects you against the financial consequences of these inevitable disasters.
We reached out to you because you were FEMA's deputy administrator for resilience. It's tough to be resilient when people don't trust you. And I wonder, based on your experience, your unique perspective, how corrosive has been this round of mis and disinformation to the reputation and effectiveness of FEMA?
Well, unfortunately, misinformation is part of a catastrophic disaster response. It's simply because during a catastrophic disaster, communications are knocked out. People aren't having access to the information that they would normally have access to. And in the absence of information, they grasp at anything that might be available. And that might not be a trusted government source. So what I can say is, in disasters, what we often say is make sure you have multiple ways to communicate. Make sure you have things like a radio and backup generators and ways so that you can get that information directly from government officials who will give you, who are the truth tellers during a disaster. And And that way, you're not going to be swayed by this misinformation.
If we could go back to something you were just mentioning about the importance of having insurance. In some of these areas, including Florida, which was just slammed by Milton, insurance can be prohibitively expensive. In some areas, we understand it's not even provided because the risk is so great of flooding and what have you. How do we solve that problem?
Well, if we're talking about insurance for individuals as opposed to governments, but for individuals, there's homeowners and renters insurance, and there's flood insurance. And oftentimes, those are two separate policies. Now, for homeowners insurance, you're seeing increasing strain on the homeowners market. It could be because of disasters, such as what we're seeing in Florida, as well as wildfires in California, or it could be because of other reasons, including inflation that we're all dealing with. Nonetheless, homeowners need to have, obviously, adequate homeowners insurance. Renters need to have insurance. But let's focus on flood for a second. Flood insurance is something that the federal government provides. The federal government has to offer that to you. So it's not a matter of availability for flood insurance. It's more a matter of affordability. To reduce the cost of flood insurance, I think there's a couple of important points here. It's the risk. Going back to the earlier points, to the extent that the risk is reduced, those flood insurance premiums will be more affordable. The second point, though, since we're sitting here in Washington, is that we need to reform the National Flood Insurance Program. The program is in desperate need of reform. There are a dozen or so reforms that have been not only floated, but proposed by FEMA. If you go to the FEMA website, you can actually see the legislative language that they have proposed, and yet action has not been taken. And until those actions are taken, until there's reforms made to the National Flood Insurance Program, we're going to be dealing with the situation again and again in the future.
So you get to the heart of the matter here, and of course, and I don't mean to set you up with a minute left, but clearly Asheville has shown us that something needs to be done. What do you do to the flood maps? What do you do to the system to make this work better?
Yeah, the cold hard truth is only about 4% of American households have flood insurance. That's a huge problem. And as big of a problem as that is, it's much bigger in those areas hardest hit in North Carolina. 1% or less of those households had flood insurance. That means they're going to be completely dependent on their own savings, on government programs, and other community-wide, hopefully, efforts that can help safeguard those individuals. But the reality is it's not going to be enough. Those in North Carolina are going to have a tough, long recovery.
So throw the map out and start over.
I'm just saying something needs to be done. Innovative solutions do exist in the flood insurance market. We have community-based catastrophe insurance that we've been talking about for 2 or 3 years now. But very few communities are taking up these innovative flood programs because either they don't realize the risk exists or they've grown dependent on the government programs.
Really lucky that you came by. We were looking forward to the conversation, Daniel. Thank you. Daniel Kaniewski. He's at Marsh & McLennan now, Public Sector Managing Director, but was FEMA's Deputy Administrator for Resilience. Smart talk here, as you would expect, on Balance of Power. Daniel, thank you, as we bring you voices of experience every day here when it comes to policy and politics in Washington. We'll have much more ahead. Our signature panel's up next. Rick and Jeannie, alongside Kaylee Lyons, I'm Joe Matthew. This is Bloomberg.
1:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all pushing higher. We're looking at records right now on the Dow Jones Industrial Average, up by 0.7%. S&P advancing 25 to 5805, up 0.4. NASDAQ up 38, a gain there of 0.2%. The 10-year 4.07% with the 2-year 3.93%. Gold is up $27 the ounce, up 1.1%, while West Texas Intermediate crude oil is down 0.8%, 75.26 for a barrel of WTI. Stocks are hitting records as big banks rally after kicking off the earnings season with solid results. The S&P is on track for its 45th record of the year. Uber and Lyft are both surging after Tesla's Elon Musk offered few details about the car maker's plans for a self-driving vehicle service that could compete with ride-hailing. Tesla shares are slumping today, down by 8%. Uber, meanwhile, up 9.4%. Lyft is advancing by 9.9%. So again, recapping, the Dow, the S&P, and NASDAQ all pushing higher. S&P at a record up 25, up 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Limes.
All right, Charlie Pellet, thank you so much. I'm Kaylee Lines alongside Joe Matthew here in Washington, where, of course, we always bring you the latest policy analysis and the most relevant polling as we get closer and closer to November 5th. And while we've been looking at the breakdown, Joe, of just Trump voters versus Harris voters, and for those who still remain undecided, although that's a very small basket we're talking about, there's a lot more nuance within these figures than that, including the demographic breakdowns of who is supporting who, or more importantly, who is choosing not to support the other candidate in numbers we've seen historically. We know that there's a big difference in terms of gender, men more likely for Trump, women more likely for Harris, but also other demographics as well, including black voters and Hispanic voters.
Yeah, you're going into the crosstabs here where things get actually interesting, and it's really affecting the strategy, the travel decisions, the advertising decisions for both campaigns. Is it as simple as that? Is this bros versus gals? Because when you start reading some of the tip sheets this morning, you really start to think that. Donald Trump is acting that way. He's going on a series of podcasts and interviews that are geared toward young men. Of course, we know that Kamala Harris has been doing the exact opposite, talking about reproductive rights in some more favorable forums. Last evening at the Univision town hall, things got pretty emotional, as a matter of fact, talking about a lot of kitchen table issues. But it was Barack Obama who made the headline on his first night out in the series of events for Kamala Harris in Pittsburgh. We should hear that. The former president speaking to young black men about their views of Kamala Harris. Let's listen.
Part of it makes me think, I'm speaking to men directly, part of it makes me think that, well, you just aren't feeling the idea of having a woman as president. And you're coming up with other alternatives and other reasons for it. Anybody you are talking to in a barbershop, anybody you are talking to in your house, in your family, at church, who is coming with that kind of attitude, I think you have to ask them, well, how can that be? Because the women in our lives have been in our backs this entire time.
Barack Obama talking about you just aren't feeling the idea of a woman as president. Let's assemble our panel. Jeannie Shanzano is with us, and Rick Davis, Bloomberg Politics contributors. Jeannie is Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. Rick is, of course, partner at Stone Court Capital. Surely, Jeannie, it couldn't be as simple as men versus women in this campaign, or is it?
It is a huge gender gap, and I like how you said bros versus gals. I mean, we are seeing it in poll after poll, the New York Times poll, the Siena poll, also Quinnipiac in some of the key battleground states. And I would just add one, and that is the Harris Harvard Youth Poll, where they show that the divide is enormous with young people, young women going for Harris by almost 50%, if you can believe it. So the divide is real. It is there. And, you know, I think there's a lot of factors that contribute to it, rather. But one that is really important, and I see it with young people in the classroom. These two groups are getting information from very different media outlets. And I think we need more work to back this up, but I would suspect that the research will show that that is helping drive this division, as some of the media outlets where they are depending on, not just for political news, but news and information of all kinds, has embraced political talk in a really heightened election year.
Rick, to bring you into this conversation, as we consider the message of the reaching out to different demographic groups, or who they just seem to be doubling down on through the selection, say, of J.D. Vance as vice president, you might be doubling down on young men, not necessarily trying to bring in women alongside. For Kamala Harris, it does seem that a bit of work here was delegated to Barack Obama, a former president who also happens to be a black man. Is he the most effective messenger the Harris campaign has in its corner right now for the voters that she does not yet have?
You know, I think that's a big question that you have to even go deeper into the crosstabs. I mean, Jeannie's right. The younger you get, the bigger the divide between male and female voters. But then you slice and dice that to, in the group that the former president was referring to as young black men. And young black men are a weak spot in the Democratic coalition right now. They used to be able to depend upon the homogeneity of black vote, and that seems to be starting to splinter. And part of that is because they're getting information, the young black men, from different sources than they used to. And a lot of this has emerged over the course of this campaign. We've always had a functional gender gap between Republicans and Democrats, but only a couple dozen %. This is much different than what has existed in previous campaigns. So in the case of young black men, yes. Does that impact young white men the way they hope Barack Obama impacts young black men? Probably not. Young Hispanic men, probably a different source. I think ultimately this has got to be on Harris's top priority list. You know, she has to create the bond between her and these constituencies, and they're moving around. And so if she doesn't close that deal soon, then she's going to lose them to the Republicans and to Donald Trump. And a lot of their issues are not the ones the Harris campaign is talking about. They care about these woke issues. They're anti-transgender. They're anti-cancel culture, because they've been the victims of cancel culture. You know, the TV they watch is not acceptable. The foods they eat aren't appropriate. The way they exercise is not the right way to do it. I mean, like, there's a whole cause and effect to this, and it's usually cultural issues that bring the young male voters into the Republican caucus.
It's quite a dynamic, Jeannie, and I wonder, does it help Donald Trump to be going to Aurora to talk about the border and Venezuelan gangs when it comes to either holding or winning over that demographic?
Yeah, I mean, this is going to be what we hear from Donald Trump going forward. He is doubling down on the base, and he has enormous support, obviously, from non-college educated white men, particularly young. The challenge for Donald Trump with that group is that this is the same group that doesn't vote in as large numbers. So that's a challenge. And also the challenge that women tend to vote more than these men. So those are a couple challenges he's facing. But if anybody can get them out, it is Donald Trump, because you look historically, Donald Trump, I think, better than anybody I can remember in recent American politics, gets people who aren't energized, interested in voting out to the polls. So he's able to do it, and he's going to try. And that, I fear, means we will hear a lot more of this doubling down on rhetoric. And just to underscore what Rick was talking about, the biggest ad that they are spending on right now on Trump's side is the anti-transgender ad. That is an ad that has gone, viral. Many social media accounts, they've spent big on it according to Ad Impact. And that is supposed to do double duty, by the way, of appealing not just to these, anti-cancel culture young men, but also to appeal to suburban moms. So you see that in the swing states, and of course it's gone viral.
Jeannie, as you mentioned, a Trump ad, we've had a lot of conversations here on this program. Certainly they're being had more widely than that about the ad buys of Kamala Harris, her sheer power to invest not only in advertising, but also in the ground game, as she's raised over $1 billion since becoming the Democratic candidate. What do you see as her ability to have something to show for that, when what we have actually seen, by and large in most polls, is the race tightening, not materially moving more in her favor?
Yeah, I mean, the $1 billion mark is incredible when you think of the short period of time she has been in it. I think we always knew this was going to be a tight race, and it has remained remarkably stable despite the change of one candidate from the top to the other. You know, she has just 3 weeks left, so she is going to have to hit hard. I think number one on the economy, number two on the issue of healthcare tied to reproduction and abortion. And she is going to have to try to reach those Nikki Haley voters who just can't see themselves voting for Trump and are not quite convinced that she's the person to do it. She's going to have to also, I think, go on the offensive against Donald Trump. We haven't seen her do that as much, but I think she is going to need to do that and let people see and remember who Donald Trump is on January 6th and those other times. We're just talking about 1.5 million voters in 7 states who still are undecided in this race that she needs to reach, and quite frankly, Donald Trump needs to reach as well.
Rick, Jeannie just said an important name we haven't heard in a bit, and that's Nikki Haley. I think it was just last weekend, Liz Cheney was on stage with Kamala Harris. Correct me if it was 2 weekends ago. It's all just kind of a blur at this point. And the hope was to unlock that vote, to let them know, former Nikki Haley supporters, that it was safe to vote for Kamala Harris. How large is this group? How important will it be in November?
Yeah, when I asked pollsters that question, you know, how much Nikki Haley vote might be available to a Harris candidacy, you know, they plug it in as about 10%, you know, and that's an extrapolation of numbers based on what we saw the vote against Donald Trump late in the primary season for Nikki Haley, things like that. And so it's a big chunk. There's no question that it could be a material difference state by state, would have a different impact based on, you know, the amount of campaigning and name ID that Nikki Haley had in places like Pennsylvania or Michigan. So it's not immaterial, but it's also one of these hardest votes to get because you're really trying to get a functional Republican to vote for a Democrat. And obviously using the Cheneys and other Republicans who have endorsed Nikki Haley or Harris as a permission structure to do that has worked in the past for Biden, but that's a big question right now. I think what's really most amazing is just how hard the campaigns are working to get people to expand the base of this electorate. It's not so much who's already available and making up their minds. It's who's never voted and are going to show up this time. And that's inefficient.
All right. Very good point from Rick Davis. As always, thank you so much. Alongside Jeannie Shanzana, who will be back with us in just a few minutes as we turn next to our conversation with Trump economic advisor Scott Bessent. Stay tuned. This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Bank stocks rally, stocks surge. The Dow, the S&P, they are at records. S&P right now up 29, 5809, gain of 0.5%. We've got the Dow up 320, up by about 0.8%, while NASDAQ is up 50, a gain right now of just about 0.3%. 10-year 4.07%, with the 2-year 3.94%. Spot gold up 1.1%, $26.57 the ounce, and West Texas Intermediate crude down 0.5%, $75.46 a barrel. Balance of power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Watching the markets for us every day here on the fastest show in politics as we join you live here from Washington on Bloomberg TV and radio. With echoes from Detroit still in our heads, of course, Kaylee, Donald Trump speaking to the Economic Club of Detroit yesterday. We brought you some of his remarks here on Bloomberg. It was a long speech. We went through it together, and about an hour and a half into this address, we got a new deduction, another piece of news to help round out what has been a series of economic policy proposals put forth by Donald Trump, creating the mosaic that we're going to be talking about here with Scott Bessent. Let's go to Detroit now, remembering this is Motown and what Donald Trump had to offer yesterday.
Today, I am also announcing that as part of our tax cuts, we will make interest on car loans fully deductible. This will stimulate massive domestic auto production and make car ownership dramatically more affordable for millions and millions of working American families.
So for more on these policy proposals, we turn next to someone who is advising Donald Trump on economic policy. Scott Bessent, as promised, is here with us here on Bloomberg TV and radio. He is Key Square Capital CEO, joining us in Washington. Good to see you. Thank you for being here. So we have a new deduction on car loans. You also have no tax on tips, on overtime, on Social Security, permanence to the 2017 tax cuts, but undoing part of it because the SALT cap will be lifted. This is a lot of proposals. Can we now call this the full picture of what tax policy would look like under Donald Trump? Or have you talked through other ideas with him and we might still see in the next 3.5 weeks?
You know, first of all, thanks for having me. President Trump is a big idea guy, and he generates a lot of these himself. I had a meeting with him on the Monday after he mentioned or proposed the no tax on tips, and I said, "Sir, what inspired you to do that?" And he said, "I was looking at this hardworking woman in a diner in Nevada, and I thought it's not fair to tax these tips."
So you guys have a chance to talk about things before we get to hear about them. Maybe you're surprised by some of them too. But I've been looking forward to running around the track with you on a couple of these ideas, because you hear the same conversations that we have every day here. A lot of economists say that these tax proposals are inflationary. We just got a new number from the Committee for a Responsible Federal Budget that Donald Trump's economic proposals could add as much as $15 trillion to the deficit over the course of 10 years. Where are they wrong?
Well, the good news is we have a roadmap for what Donald Trump did in Trump 1.0. It was not inflationary. The government revenues went up. And my friends at the committee are, they are anti-growth and higher taxes. Because if you look at the way the scoring works, and I'm a Wall Street person, I've just become familiar with this, and I think most of your viewers and listeners don't understand the way it works. And it is heavily skewed toward higher taxes and less growth. You begin with a baseline GDP estimate that doesn't move. So I believe it's unreasonable to think that if Donald Trump's proposals are to cut taxes, that growth will not accelerate. If Vice President Harris's tax proposals are to raise taxes, that growth will not be lower. But in the scoring, it's always at 1.8%, straight line for 10 years.
Okay, so what is the figure you think is realistic if all of these tax cuts are implemented, if we're to grow our way out of this? What does that translate to in annualized GDP growth?
Well, for annualized GDP growth, I think, like under Trump 1.0, that we can get moved back towards 3%. But right now, our GDP growth, and I find this very interesting that we're hearing that Kamala Harris is the one who is going to have some kind of budget rectitude, because I will tell you, I am very concerned about what is happening right now. We have never had a budget deficit like this. We are at 7% of GDP in terms of the deficit. We've never had this when it's not a recession, not a war. And what do we have to show for it? We have they have created 18,000 manufacturing jobs. Last year, the economy only created 250,000 private sector jobs. This is a takeover of the government, of the private sector. The jobs are being created in the government and government adjacent. And I think President Trump's goal is to re-privatize the economy, get the private sector creating jobs. And I think we could bring down the deficit to GDP to something with a 3 on it by 2028.
The 3, 3, and 3 that we keep hearing about.
3, 3, and 3.
You've got another idea that's generating a lot of talk right now, that Congress create a Fed chair designate who would essentially serve alongside Jay Powell for the remainder of his term. You said, quote, based on the concept of forward guidance, no one is going to care what Jay Powell has to say anymore. Interestingly, Donald Trump told Bloomberg Business Week a couple months ago that he would allow Jay Powell to finish out the rest of his term. What does Donald Trump think of this idea?
Well, first of all, I'll say I don't speak for the Trump campaign.
Okay.
Sure.
And it's not for Congress to create. It would be for President Trump, when he wins, to nominate. Because if we go back, and I've gotten blown up on the Twitter sphere on this, and I think it is a serious lack of understanding, because the original sin, in my mind, that unleashed the great inflation on the American people, the Biden administration waited until the last possible moment to renominate Jay Powell. It was the latest nomination in the 21st century for a Fed chair. It was clear in his Jackson Hole speech in August of 21 that he thought inflation was accelerating. He was still calling it transitory, but was open to the idea it was accelerating. They kept their thumb on him until November and renominated him at the end of the month. He was confirmed in December, and then he didn't do the first rate hike until March. If they had announced his reappointment in June, July, he could have been hiking rates in October. So,
but they were reappointing the same man. If it's to be someone new, couldn't that create massive market uncertainty if you're not clear on which voice is providing forward guidance?
Well, I think, no, I disagree, because I actually think it provides more certainty, because you could do one of two things. The current Fed chair could be reappointed, so you created a path there, and the new Fed chair nominee would give forward guidance beyond the current Fed chair's sell-by date. So you would have forward guidance up until May 26 with Jay Powell, and then you would know the market could structure a forward curve since then. So, I call this, and I'm not such a big fan of forward guidance, but if you believe forward guidance is good, why can't you give forward guidance on who the Fed chair is going to be?
Where's Donald Trump's head on this? And I know you're not speaking for the campaign, but your relationship with him is why we're here right now. He wants to play a role in setting interest rates. How deliberate will he be if he's reelected on that front?
Well, he wants to have a voice, but every president has a voice. Joe Biden told us in the State of the Union, I think we're about to get an interest rate.
Is it as simple as that, as opposed to setting actual interest rates?
I think what's very interesting about President Trump, he's been in the financial markets through his real estate holdings. He has a deep understanding of financial markets as opposed to most politicians. So he wants to be involved in the conversation. He has very well-formed opinions. He has a lot of private sector friends. So he just wants to be a voice. Senator Warren and 2 other senators, right before the Fed decision, came out and said, it should be 75 basis points, which there's no model that said that it should have been, but they opined that's their right. and I think it's his right. I just think his opinion's much better informed.
Well, certainly he has many of them, including around the issues of migration, which he probably will be focusing a lot on as he visits Aurora, Colorado today. He has floated mass deportation, rather. And if you're looking at a figure of over 13 million people who have not legally or do not have legal status in the U.S. as of April of this year, if they were to go away, there's studies, including from the American Immigration Council, that say that could reduce GDP by 4.2 to 6.8%. The Economic Policy Institute found that without immigration, the prime age workforce would have essentially seen no growth at all in the past quarter century. What is the economic impact potentially of the kind of deportation he's talking about? Where would you find those workers otherwise?
Well, let's go back, because I find all this pretty duplicitous. For my entire career, probably most of your entire lives, the academic economists said, oh no, absolutely, the unauthorized new arrivals do not put downward pressure on wages. Then, lo and behold, in this cycle, when we had the massive inflation, we get, whether it's 11 million new arrivals, or as President Trump thinks, 21 million new arrivals, it does push down wages on the bottom quintile, which I think is abominable. These are working people, Americans, who are seeing their wages get pushed down. So now it's what I always believed, what you could see, what you could observe, it does push wages down. And I would just say I dispute those GDP numbers, because if it were good, why wouldn't we just have a road from Terra del Fuego to the Rio Grande and let everybody who wants to come in? We could double GDP, but per capita GDP per American would drop substantially. It is about American citizens' standards of living. So, and to talk about the mass deportation, I really like the Senator Vance's answer on that. Said, well, how are you going to do it? He said, the same way I eat a large Subway sandwich, one bite at a time.
Scott Bessent, he's CEO, Key Square Capital, and has the former president's ear. We appreciate your time for being with us here at the table today. Thanks for talking policy. We'd like to stay in touch with you as we get closer to the election.
Yeah, I think there's going to be a lot of action between now and
a lot of action and a lot to talk about.
So.
Thank you very much for being with us here in Washington. I'm Joe Matthew alongside Kaylee Lyons here on Balance of Power. Yes, the fastest show in politics. Turning some pretty interesting ideas today following the former president's address in Detroit yesterday. Fast forwarding to Scott Bessent today, and now Jeannie Shanzano, Bloomberg Politics contributor, with her thoughts on the conversations that we've been having over the course of this hour and the way the Trump campaign has been messaging its economic proposals. Kaylee, most recently with this idea of a new deduction. Jeannie, what did you think about the construct of what we heard from Scott Bessent by way of the campaign presenting these ideas to the investment community and to voters?
Yeah, I mean, it's fascinating to hear from him, because we know how close an ear he has to Donald Trump, and he has a lot of really interesting ideas. One thing we heard him tell you guys is that we know what will happen because we've had Trump 1.0, and this will be Trump 2.0 if he's elected. But I think if you look back, of course, some of what he had to say about what happened in Trump 1.0 is overstated, right? On the issue of growth, for instance, never as strong as Donald Trump said it would be. Added an awful lot to the debt. That's another issue that we have to be honest about. And then low inflation, of course. There was low inflation, but not always for the reasons that we wanted or people would invite. So, there's a more mixed record, a more nuanced record there than, I think that we hear on the campaign trail a lot. And of course, I would just add to that the issue of jobs. So from all of those perspectives, I think we can learn a lot from Trump 1.0, but we have to look very carefully at what the picture of 1.0 tells us.
Jeannie, in our final minute here, I was struck by something that Scott Bessent said about the way Donald Trump comes about these policy proposals, that he could just be inspired by one woman who has a lot of wages earned through tips and decide to put forward policy, whereas Kamala Harris does seem to be much more deliberate and policy wonky, if you will. And yet he is getting better marks on the economy in a lot of polls, or at least who would be better stewards of it. Is that something the Harris team should be keeping in mind? Should she be more reactive?
I think her numbers have gone up. We know, looking at the polls on the economy, but he still has the support of Americans on that. And so they do have work to do there. And the reality is people do give Republicans and Donald Trump credit for cutting regulation, for doing, being able to handle the deficit and those things. But we just heard Scott talk about the fact that the predictions on the deficit, closing in on what, 7.5 trillion and up, depending on who you talk to, are things that are being discounted there. So I do think we have to look at the numbers that experts tell us are going to be happening if and when Donald Trump comes back into office.
All right, Jeannie Shanzano of the Center for the Study of the Presidency and Congress and Bloomberg Politics contributor, thank you so much for being with us as we wrap up here our first hour of Balance of Power. But of course, Joe and I will be back at 5 p.m. Eastern Time. Although it's Friday, Joe gets to be off on Friday. Right? I'll be back at 5 p.m.
I'll be
Eastern
watching
Time.
along
Joe
with
had an
you.
early morning.
Sure did.
But Bloomberg Business Week is ahead before that, so stay tuned here on Bloomberg TV and radio.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Hello and welcome to Bloomberg Business Week. I'm Katie Greifeld. Matt Miller is sitting next to me, to my right. Carol Masser, Tim Stenevec, I think they're flying back from Los Angeles. They're not here today. We are here on this Friday, and boy, Matt, we have a lot to talk about.
Yeah, there's a ton going on.
Whew.
Obviously, the banks, we've been talking about it forever. It's finally happened. Big bank earnings came out today. They didn't disappoint.
No.
And really providing a little bit of lift to the market. Now, in my opinion, even more interesting was I guess failure is not too strong of a word.
Wet balloon is what I said earlier.
A wet balloon.
A wet balloon.
I think the Tesla presentation of the Cybercab did not go well, it's safe to say. Those shares are off more than 8%, the biggest percentage loser on the S&P 500. And as a result of Tesla dropping the ball, Uber and Lyft, of lesser importance, but still one of those companies, is soaring. Uber is up 10%.
I think this is fascinating, of course, but you already know that because we talked about it on Open Interest. We're going to talk about it again today. In addition to the big banks, we're also going to talk to David Gura about politics. We're 20-something days away from the presidential election. We'll talk to the CEO of Priceline, which we also did on Open Interest, but that should be fun. A lot coming up in the next 3 hours or so. But first, let's get over to Charlie Pellet for an update.
Katie Greifeld, and here's what's going on. We have got the Dow, the S&P, NASDAQ, all pushing higher. We are looking at records as of now for the Dow and the S&P. Keep it locked into Bloomberg Television and Radio to see how things shake out at the close. But right now, 30-point jump for the S&P, a record there worth repeating, 58.11, up by about 0.5%. The Dow up 348, up 0.8%, while the NASDAQ Composite Index higher by 50, up by about 0.3%. Cannot ignore the move in the Russell 2000 index today. Small cap shares surging 1.8%. 10-year 4.07%, with the 2-year 3.93%. Gold up $28 the ounce, up by about 1.1%. 26.58 West Texas Intermediate crude down 0.2%, 75.69 a barrel. Bank earnings Friday, yes, PPI Friday as well. But look at those bank stocks today. J.P. Morgan Chase after earnings up by 5.2%. Wells Fargo after earnings surging now by 6.3%. A whole lot more on big banks with our Allison Williams coming up in just a moment. Key takeaway at this hour, records for both the Dow and the S&P, with the S&P up 30, up by about 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. You take a look at the S&P 500 right now. At the sector level, your biggest gainer is those financials. That sector up about 2% as a whole. A lot of those gains, a lot of that strength is coming just from J.P. Morgan, which is currently up about 5.1% after taking the earnings stage this morning. Let's break it all down now with Bloomberg Intelligence Senior Global Banks Analyst Allison Williams joining us in the studio. Allison, it's already been a long day for you, but talk us through, of course, the reaction that we're seeing, because it seems like J.P. Morgan managed to surprise really across the board.
It did, and frankly, I think that the reaction is it's surprising to the upside in terms of how strong the stocks are reacting. I definitely think that we got good news from J.P. Morgan. I think, on the margin, good news from Wells Fargo. But in general, I think the stocks are also reacting to the potential soft landing for the banks. So we know that interest rates are coming down, and that the best case scenario for the banks are interest rates come down. It helps to spur loan growth. That helps net interest income. Credit continues to be solid. What we saw in the quarter, first of all, credit does continue to be solid. J.P. Morgan did take $1 billion reserve, but we think that's on the conservative side of things. Wells Fargo,
you think they're being too conservative? They should have taken a bigger reserve?
I would say that the $1 billion is conservative. I think the fact is that their charge-offs, like the current day losses, came in lower than expected.
Right.
So that's a positive, right?
Yeah. So basically, you're saying the consumer is in pretty good shape, and they were smart about their loans, right?
Correct. And in general, what the most of the provisioning we've seen is the fact that card loans are growing. So it's just about the growth. So, things are normalizing, as we say, which basically means they're going up to where they should be over time. But things are healthy. Net interest income, I think that's, the big news of the day. In fact, you saw JP Morgan stock bouncing around a little bit because they sort of went back to the beat and raise. We saw that for several quarters in a row. They beat net interest income. They raised guidance. We didn't really see that the last couple of quarters.
Did they set us up for this? I feel like we got set up. I feel like we've been duped,
Yes.
to be honest. I
Yes.
look back at the HCPI function, right? So I'm looking at JP Morgan stock. 1 month and 1 day ago, on September 10th, Daniel Pinto, the all-important JP Morgan president, came out and said, hey, you guys on the street, your estimate for net interest income is way too strong. We're not going to make that. And he pushed the stock down on that day 5.2%. Now they come out and beat on net interest income and raise their forecast for this year, and the stock is up 5.2%.
Yeah, and there are two things he said, by the way, because he said net interest income is going to be lower, expenses are going to be higher. And so today we were looking for evidence, right, of, estimates have came down for net interest income. So have they come down enough? And so they came out, they beat the current number, they raised guidance for the fourth quarter, and then Jamie came out and said, next year it still looks a little bit too high. And so my guess would be, at BI we don't do estimates, but my guess is going to be estimates go up for fourth quarter and people wait to adjust their 25 to see what happens over the next few months. Because as Jamie also said, things can change, right? And we are going to want to see what happens in terms of the loan growth and the deposits and all of that. But, to your point, they talked things down. They came out and did better. They also, similarly on the trading front, right? So trading and investment banking fees be pretty much across the board, except for the equity fees, maybe a little bit more optimistic. And we think that really sets up well for, Goldman and Morgan Stanley, which we're going to hear from next week.
Right. Well, let's talk a little bit more about Jamie Dimon, because, of course, you have the numbers, and then you have the call, and then you have, of course, what Jamie Dimon says. He sounded kind of doom and gloom a little bit, relatively speaking, on the economy. He also had some interesting things to say about cash, and I believe we have a clip of that.
I've been quite clear that I think the future could be quite turbulent. Cash is a very valuable asset sometimes in a turbulent world. And you see my friend Warren Buffett, stockpiling cash right now. I mean, people should be a little more thoughtful about how we're trying to navigate in this world and grow for the long term for our company. I prefer to wait. We will be able to deploy it. Our shareholders will be very well served by us waiting.
I don't remember which one.
And so that was Jamie Dimon, just talking about how he views cash as a valuable asset class still. And I mean, you're seeing that in money market funds. Matt and I talk about this all the time, the 6-point-something trillion
Almost
in money
6.5.
market funds. Yeah. And it's interesting that, I don't know, I feel like for some of the regionals, that's pained people maybe shift their deposits from banks into money market funds, but I guess that's not a JP Morgan problem.
So I think that, to the extent that obviously a bank has both deposit offerings and money markets, that's a positive. But I think in general, his point is where there are, a lot of potential risks, it's always good to have cash. Keep in mind that one of the best things Jamie's done throughout his career, right, is be ready for the moment. So if you look back at the financial crisis, going into that, investors kept asking him, oh, why aren't you returning capital? Why do you have so much capital? And that's where the term fortress balance sheet, I think, first came from. And because he had that balance sheet when a lot of other companies were weak, right, he was able to pick up the deposit franchise of Washington Mutual. He was able to pick up the prime brokerage business of Bear Stearns. He's only gone on to build those even stronger. Again, in the pandemic, picked up some assets. Even last fall was able to do some things. And this quarter, again, like that capital ratio, that was another, I think, really positive surprise for bank investors. They did a lot of buybacks. And that's why, again, like I think sometimes a lot of his comments get headlines, but it's really the underlying philosophy that he's talking about in terms of there are a lot of structural risks out there. Lisa had a great interview recently where Jamie said, talked about the structural risk, but also thought the Fed did the right thing. So I think near term, things look very strong, but he's just pointing out there's a lot of structural things out there. He focuses a lot on the geopolitical risks, and cash is something very valuable to have when you see that sort of risk planning.
He's just heroic.
Jamie Dimon?
I mean, he's like otherworldly. He mentioned in that soundbite that you played Warren Buffett. And I feel like Jamie Dimon is probably Wall Street's, favorite sort of giant since Buffett.
He's
just always hitting home runs.
Yeah, but I don't know. I was listening to an interview that Charlie Munger did randomly a couple of years ago, and he was talking about like the sleazy products that the banks sell. He didn't call out JP Morgan specifically, but I don't know. And Charlie Munger isn't Warren Buffett, but you think of them in the same breath. Yeah. This is a tangent. I do want to talk about Wells Fargo a little bit while we have you, Allison, because of course, net interest income, that was the big headline for JP Morgan. It was also the big headline for Wells Fargo, maybe in the other direction, even though Wells Fargo, I think, is having a pretty good day. But
they're up more than 6%.
Yeah, but talk to us about that reaction, because they did miss on net interest income.
So they did miss, but I think once you they missed, and their guidance moved to down 9% for net interest income this year. Previously, it was down 8 to 9%. So I think initially when you saw those headline numbers, as I did, thought like, oh, this is negative. But digging into it a little bit, a lot of the downward guidance is really based on the miss that we saw in third quarter. And one of the things that they did was to restructure their investment securities portfolio. So really the fourth quarter estimate looks about stable. So the downward guidance really kind of reflected some of the pain in the quarter, if you will, and the investment banking business and a lot of the fees that they're seeing more than offset that. So they were able to absorb the loss, the hit from restructuring their portfolio, able to absorb the weaker than expected net interest income, and still deliver on the top line.
What's your favorite bank? I'm just putting together a comp chart. I'm looking at, which I always do, JP Morgan versus Wells Fargo, Bank of America, Morgan Stanley, Goldman Sachs, Citi. I feel like that pretty much covers it, right? Morgan Stanley over the last 5 years, killing everybody else.
So keep in mind, we don't recommend stocks and VI, but I
just meant your favorite bank to cover.
I can't talk fundamentally. For me, they each have their own. JP Morgan, best in class, best returns, executing a virtuous cycle of technology spending that has helped the bank, 10, 20 years. So continue to execute really well. Goldman Sachs, best in class in that institutional business, and I really like the changes that they've made in the last couple of years. A lot of the diversification strategies, if you will, did not play to their core competitive strengths. I understand why they made those changes, but I think it's sort of a vote of confidence in the institutional business that they're kind of getting back to where they were. Morgan Stanley, to me, still has a little bit to prove, right? Gorman did an excellent job in terms of making acquisitions and shifting the business mix. But now Pick is going to have to deliver on a lot of the promises that Gorman made sort of on his way out the door.
The stock's pretty much tripled with.
But they've changed. But the move from the institutional business to the fee side, right? So I think that was the better move than perhaps some of the diversification strategies that Goldman did. So Goldman backtracking, but Morgan Stanley gonna press their bet in terms of having that more recurring revenue, et cetera. So definitely done a good job there. Bank of America, U.S. Bellwether, and then Citigroup, just really a unique animal. I think disappointing for a long time in terms of trying to get operating leverage. That's a holy grail for them, and I think Jane Fraser finally making some good decisions. So,
Matt, I have an idea. We should ask Mike McKee who his favorite Fed speaker is.
Oh, I was going to ask him about his favorite bank too.
Oh, cool.
But we can get to that. I just think it's interesting because, look, we can talk about the finances and the market share and this and that, but Allison has covered the banks for a long time, and
she certainly has.
Got to have a favorite. There's got to be one to which she's partial. She's not going to tell us what it is, but thank you very much, Allison Williams. Let's bring in Mike McKee, our international policy and economics editor. Do you have a favorite bank or?
I would just say, and this would be something for you to think about, given that you have two small children, is that any bank that has lollipops. Yes, teller windows is your favorite bank.
Yes, Those are good.
Yeah, those
I like
are
going
good.
into Huntington Bank Shares is my favorite because
What
I've
was
grown
that,
up banking there with the lollipops at the counter.
What was that bank that used to give you a toaster, like a red
Oh,
toaster?
well, a lot of, was that?
I think there was a lot of. I think
That was toasters. Was it like a?
Well, I would have really flourished in that
It was
era.
red, but I feel like that's like
That's a Bank America
that's like
color,
a classic
right?
strategy.
Yeah. Okay. Well, we'll fact check this, but Mike McKee, I feel like I should ask you about PPI or something.
Wait, what about favorite Fed speaker?
Well, that's a
You
hard
have
one. He
Like,
actively
current or of all time?
Oh, that is a hard one because there are a lot of really, really smart, fun people to talk to.
But Paul Volcker, right?
Paul Volcker was the only one that ever told me to get lost
Nice.
because he didn't want to be interrupted at the time.
Well,
But,
it seems like you got to keep trying with Powell then, and maybe.
well, Alan Greenspan, the only thing he and I ever really talked about was baseball because he didn't want to talk to reporters about anything to do with
Tom Keene would have
monetary
loved him.
policy.
Yeah.
So-
All right, so PPI. Good point.
PPI.
We should
I
stick to
mean,
the news.
It's pretty boring, though. I mean, nothing really happened. It came in as expected. It feels like both PPI and CPI tomorrow morning. Maybe you saw a little bit more of a market reaction to CPI, but no real fireworks.
No, I mean, isn't that a good thing for a change? Given everything
suppose.
that I mean, a week ago, we were trying to figure out the jobs report, and the markets were going crazy and totally taking off all their 50 basis point cut trades for November. And today, not much happened because we didn't get a whole lot of movement in the PPI. Goods prices went down 0.2%. Services prices went up 0.2%. Neither one is a huge move. So it just looks like we're sort of status quo with inflation at this point. Little change in CPI, but what you're seeing is the nerds who put together their forecast for the PCE,
It's Matt's favorite word.
based on these two indexes, are looking at very little change for the PCE numbers as well. You get a range of basically 0.2 to 2.5 tenths.
I prefer eggheads.
I was actually
To
going to
nerds.
say I really like the term eggheads.
Yeah, it's much better for people, for like pencil pushers who are putting stuff together.
Yeah, like the NBER. Like I always think of those guys as eggheads.
Eggheads?
Yeah.
Yeah.
But anyway, I feel like the last 2 days, maybe it wasn't fireworks, but it certainly still leaves the open question of what is the Fed going to do in November.
Leaves the question open, and the markets are putting about a 15% chance of a hold on at this point. They're keeping, a little bit of a hedge in place because we could get a bad jobs report that would cause the Fed to maybe think twice about something. But at this point, it doesn't look like there's any reason for them not to do 25 unless the October payrolls report is really bad, because we pretty much know what PCE will be from these two numbers. These two numbers didn't change the inflation picture a whole lot. So if you want to be lowering interest rates, which they've all said they want to keep doing, then 25 is fine, and there doesn't seem to be any need or reason for 50 right now.
Just looking through the ECAN function here, I thought it was way more interesting to focus on jobs. We got jobless claims yesterday. And clearly the Fed is also moving past inflation and focusing on the labor side. But I heard you touting an ECAN screen this morning. What was that?
That was just the composition of the PPI and the fact that services make up such a big proportion of that, that you look at it and it's the blue bar there is services, and there's a little dark blue bar in the middle, and that's goods, and it's just how little there is there in that category.
All right, Mike McKee, it's great to see you. Have a great weekend. That, of course, is Mike McKee. Up next, we're talking Lyft, we're talking Uber, we're talking Tesla. Don't go anywhere.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at records for the S&P 500 index. In fact, trading at or near session highs right now, with the S&P up 36, 58.16 on that index, up 0.6%. The Dow up 391, up by about 0.9%, while NASDAQ is rallying 72 now, up by 0.4%. The Russell 2000 index of small cap shares up 1.8%. 10-year 4.07%, with the 2-year 3.93%. Gold up 1.1%, 26.58 the ounce, and West Texas Intermediate crude 75.50 for a barrel of WTI, down by about 0.5%. Stocks are hitting records as big banks rally after kicking off the earnings season with solid earnings. Uber, Lyft both higher after Tesla's Elon Musk offered few details on the carmaker's plans for a self-driving vehicle service that could compete with ride-hailing. We'll have more on the topic coming up in just a moment right here on Bloomberg Business Week. Tesla down 8.1%. Uber, meanwhile, rallying 10.1%, and Lyft up now by 9.5%. Recapping the Dow and the S&P, both at records. S&P up 36, up 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie, thanks very much. Matt Miller here in the Bloomberg Interactive Broker Studio with Katie Greifeld by my side. Carol and Tim are off today. I think they have a travel day. So they basically take a day off.
Yeah.
To fly back.
Seems like a great gig,
from being in the field. Yeah.
We're here for like 15 hours, but it's good for them.
More power to them that they've worked that out somehow. In any case, as a consolation, the producer said we could talk about cars all I want today.
Yes, beautiful.
And I think it's kind of helpful that one of the biggest movers on the day is Tesla.
Yes.
In terms of percentage losers, it is the biggest one on the S&P.
Big time.
Percentage gainers, the biggest one is?
Uber.
That's correct. And those stories are related. You may not understand exactly how at first, but we're going to bring in Kevin Tynan to talk about it. He's the director of research at Presidio Group, joining us from Princeton, New Jersey. How very Ivy League of you, Kevin. But not in your garage. I'm used to seeing you surrounded by like a wall of guitars and a V12.
There's nothing on that wall.
Well, actually, I just finished. I was just out there. We finished an engine swap in an older ML55 AMG truck. So I got a lot of scraped up forearms and knuckles and whatever, but it's running. So.
I'm a fan of the ML55.
So the place is a mess, basically. That's why I'm in here.
That's a Mercedes-Benz SUV that always reminded me of a hiking boot. It's like the same shape as a hiking boot.
I'm going to Google this after the segment.
Let's talk about Tesla, though. They unveiled, Elon Musk yesterday, the richest man in the world, unveiled his cyber taxi or cyber cab, I guess. It's a driverless car. There's no steering wheel. There are no pedals. I thought the form factor was pretty cool. I mean, it's a fastback, kind of looks like a Mustang Mach-E. But investors were super disappointed by a total lack of detail. Like, when are they going to come out? How much are they really going to cost? Are the regulators going to allow them to be sold in large numbers? What do you think about this cyber cab launch?
I mean, and that's typically the standard operating procedure is somewhere down the road. It's basically to put ideas out there that this is not an automaker, right? Because that business is worth zero or less, depending, what you're building and how much of it. The interesting thing to me about cyber cab or whatever was, granted, there's no driver, but it was only 2 seats. Am I wrong on that? Or
that's so weird.
It would seem like
makes no sense to me.
It would seem like you would, like you go out as couples or, you and a couple of buddies. Like it seemed like 2 seats, even though, I thought it should have held more people to that, but whatever. But no, that's ultimately the plan is that this is a company that is a story stock, obviously, and the narrative is every way that it is not an automaker, and it's about technology and all the non-disprovables down the road that get it the valuation similar to other or even higher than other tech companies.
And I mean, he also revealed this robo-van concept that could transport as many as 20 people. I think we were showing images of the van, but I agree on the 2 seats thing. But of course, you think about why this is going over so poorly in the stock market. It's because the timelines here are so squishy. I mean, you think back to 2019, and Elon Musk said that he was going to have 1 million robo-taxis on the road the following year, and that obviously did not happen. We are in 2024. But, I mean, Kevin, you point out in your notes that this is sort of, you know, par for the course for Tesla and for Elon Musk specifically.
Yeah, I mean, look, there's every excuse of he doesn't make it, but he eventually gets there or whatever. And I think the issue with the stock today versus competitors is that, one, it proved that he isn't far and away ahead of anybody, if at all, or how far behind, because those competitors have come out very recently and said, like, hey, besides the science and the regulatory environment, this still has to make money someday. And we're very far away from that. And I think when you look at the event last night, he didn't answer any of those questions. If those are the 3 big things, like, hey, is it possible? By when? And when does it make money? The investors really didn't get any of those answers. So, so you sell off one and you buy the others that at least, if nothing else, might not be any closer, but they're being more realistic about the goals.
By the way, there already are driverless, like, robo-taxis in San Francisco and probably other super progressive cities. Why is this such a big deal? Why is it so hard to achieve it? Waymo already does it.
Yeah, well, you know, I thought what was interesting going back a way, you know, they talked about, you know, because you'll hear it all the time, especially from the bulls, about how much data they get from full self-driving already being on the road. But the question is, how much of it is actually usable? How much is actually teaching anything, right? If nothing's happening, what are you learning from that data? So you can collect all the miles, but until you have a disengagement or an event, it doesn't really learn anything. So, you know, I think it's a little bit of that, is that people get distracted by how much data they collect. But my question is, like, how much of it is really usable? And how do you prepare or plan for all the things that don't happen all the time, you know, or are very rare? So, you know, I don't know that, you know, the question of the science of it, to me, is, you know, and the safety of it is paramount. And that's before you get into all the other issues, right? The regulatory issues and the profitability issues. So, you know, I think investors are looking at it like the Ubers and Lyfts of the world, or even Waymos of the world, that are being a little bit more conservative on timelines, on safety, on profitability, are being rewarded, I guess, for lack of a better word, in this market.
Yeah, Uber in particular screaming higher on this Friday afternoon. But Kevin, you made the point that when it comes to Tesla, it's a story stock, and the story for Tesla has become a little bit murky. When you think about Tesla, I mean, what story do you think that investors would want to latch onto here?
Yeah, I think it's that it deserves, because it has, even beyond technology multiples. So this can't be an automaker, because then you would be getting 4, 5, 6 times, and it's getting 10 times that. So this can't be an automaker. So all the issues with supply versus demand, overcapacity, price weakness, margins compressing, all that is discounted and pushed aside. And then you look at it and you say, okay, but what's coming? And this is an I don't know, hundreds of billions, $1 trillion market, and they're ahead, and that's the narrative. So, you know, to an extent, it almost feels like the product of this company, because a lot of things that they show and talk about don't actually exist, or aren't marketable, or aren't revenue generating. The product is the stock at this point, when you're in between these cycles of growth in the auto industry or in the auto division, which isn't really happening, and you don't have these other products that you've promised on your timeline yet.
It's still worth a shocking amount. Even though it's down by half since its high in 2021, it's a $700 billion stock. I mean, the Ford Motor Company, is a $40 billion stock. General Motors, which has been doing better than any of the other car makers this year, it's only a $54 billion stock. So, I mean, it's pretty insane that Tesla's worth 14x General Motors.
Well, look at even a Toyota of the world, right? If they're a better manufacturer or automaker than that company top to bottom, you know, and the valuation dwarfs it, which just tells you that the market isn't thinking of this company as an automaker, because if they were, they would be an also ran or even a not very good company.
Toyota's worth $275 billion, so not even half and barely a third. Let me ask about Uber. Why is, when I got here in the morning, I didn't quite grasp until I started reading through notes, why Tesla's failure is Uber's success in this space. What do you think?
I think it's just it's the removal of uncertainty, right? There was all this build up to the Tesla event, and then there's the belief, and probably isn't a zero-sum game, but at least that's the way it's played out today, is that, oh, okay, Tesla doesn't have it figured out yet, and we don't know when they will, so everybody is sort of still in play. So, you know, when you look at the valuations, Tesla's priced for perfection in all of these ancillary businesses, and last night kind of proved that they're not really worthy of that yet, at least not at this moment. And then it provided it removed some uncertainty about the things that Uber and Lyft had said recently.
I mean, we have a big take story, which we're going to talk about in just a few minutes, about how Uber is saving hundreds of millions of dollars by essentially screwing drivers, right? Stopping them out of its technology stack so that they can't get customers or can't work. I guess the idea is if Tesla were successful, it would take the driver out of the equation. You wouldn't need an Uber, but then somebody would have to operate the robotaxi fleet, right?
Yeah, you would still need fleet management, and, you know, and again, how far away is that? I know, you know, in my own mind, like, how ready am I to walk out of an airport terminal and get in something without pedals and a steering wheel to go 45 minutes into the city? That's after that I'm convinced that it's safe, that the regulatory environment is favorable, that the companies can stay in business because the technology is profitable. So again, I think that timeline is way longer than is priced in for some of the stocks right now, because I don't think it's around the corner.
All right, Kevin, really great to speak with you. Of course, all things cars and what's going on in the world of cars. That is Kevin Tynan. He is Director of Research over at the Presidio Group, joining us from Princeton, New Jersey.
I miss you, bro.
Have fun in the garage in Princeton. We are, 90 minutes away from the market close?
Oh, yeah. We are 90 minutes away from the close of the... How are stocks doing right now? I haven't even looked.
Probably pretty good. I mean, the big banks are ripping. You have Uber ripping. You have Tesla, of course, is the big weight, I guess, in the index. But the S&P 500 currently up about 0.6% to finish out a very, very volatile week. Do you remember how bad Monday felt?
Yes, it did. But then Tuesday was awesome, and so was Wednesday. In fact, right now, we're at an all-time high, 58.14. So if we close here, or obviously anywhere near here, we're going to set an all-new universal record for S&P 500 closes. This is Bloomberg.
2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow and the S&P both on track for a record close. If we do see that on the S&P, it will be the 45th record this year. Stocks hitting highs as big banks rally after kicking off the earnings season with solid earnings. The Dow, the S&P, NASDAQ all very much in the green, with the S&P holding close to session highs. Right now up 31 at 5810. That is a gain of 0.5%. The Dow up 351, up 0.8%. NASDAQ up 54, a gain of 0.3%. The Russell 2000 index of small cap shares outperforming, now up by 1.8%. 10-year at 4.07%, the 2-year 3.93%. Gold up 1% now, $26.56 the ounce, and a retreat for West Texas Intermediate crude down 0.5%, $75.51 a barrel. J.P. Morgan Chase shares are surging after earnings, up 5.2%. J.P. Morgan reported a surprise gain in net interest income for the third quarter, also raised its forecast for the key revenue source. Also rallying today, Wells Fargo, third quarter profit topped analysts' expectations. Wells Fargo up by 6.2%. Again, recapping, the S&P up 30, trading at a record up 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. Of course, as we've been saying, less than 90 minutes ago until the trading day. As Charlie Pellet mentioned, if we close today with these gains, it will be a record close. And Matt, I believe that's the 45th record close. That sounds right.
Yeah. I mean, I guess things must be going pretty well, right?
I know.
If we're looking at a 45th record high this year for the S&P 500, 58.20 is the high that we hit for the day.
Yeah. You know, something I do is I watch Bloomberg Surveillance in the morning, 6 to 9 a.m. I don't know if you're familiar with the program. Lisa Abramowitz was saying something interesting today about how the equal-weighted S&P 500, I think, has had 20 record closes this year, which we know that there's been a broadening out, but that's a nice stat to do it. Anyway, let's talk about the Bloomberg Big Take today. Of course, that highlights our best and most thoughtful reporting. The Big Take today, here's the title: How Uber and Lyft Used a Loophole to Deny NYC Drivers Millions in Pay. One of the people on that byline is Natalie Lung, and she joins us now. And Natalie, reading that headline, I'm already hooked. Unpack it a little for our viewers, for our listeners, about how you got there.
So what was happening over this summer was that Uber and Lyft were locking out their drivers. Basically, when they want to go online and signal to the app that they're ready for passengers, they can't get online. Like the apps would tell them, the regulator is forcing us to limit access. And we know that the companies are doing this to try to game a key metric in the pay formula of New York City so that they are saving and they don't have to pay as much next year.
So what's the idea? The regulations that recently have been put into place mean Uber needs to pay their drivers, or Lyft, or any kind of rideshare operator, even if they're not getting rides. So for example, if I'm an Uber driver and I'm sitting like 58th Street and I'm waiting for a ride, I'm not getting one. If I sit there for an hour, they still have to pay some kind of minimum wage to me.
Right. So,
and they're trying to avoid paying that.
Yeah, so that's the idea. They're trying to erase that downtime, that waiting time that that drivers will see. And in fact, that rule has been in place for around 6 years. And the original intention was that because there were a lot of drivers, a lot of supply back then, and drivers were not getting enough trips. So the idea was to bake in this idle time so that they could even be compensated without passengers.
So it's pretty bad. I mean, I love the story, but it's pretty depressing that some people have not been able to be present for their, one guy wasn't able to be present for the birth of his child, right? Some people are getting deeper and deeper into debt because they just can't make a living wage if Uber locks them out all the time like this. And it's so unpredictable that you really can't plan around it either. Why would they continue to work for this company?
For a lot of drivers, this this is their full-time job. A lot of them I talked to, they were former yellow cab drivers who were enticed to join Uber and Lyft because of their promise of flexibility of the gig economy, right? And this is their full-time job. And when the companies tell drivers without notice, like they can't work or they can't work when they want to, it makes it very hard for them to pivot right away. And we did talk to some drivers who are thinking about other jobs, such as working for other traditional car bases, like you would call to get an airport ride, those kind of bases, or go to another industry like construction.
When I read a piece like this, I always wonder about the reporting process that went into it. And what I love about this piece is that you detailed some of the steps that you took here. For example, you built a WhatsApp tip line where drivers submitted over 5,300 screenshots that reporters then verified. Just talk us through the TikTok a little bit about how you actually reported out this story, because it's quite impressive.
Yes, so with our investigative data reporter, Leon Yin, who built this WhatsApp tip line that would receive screenshots from drivers so we could take as evidence of when lockouts happen. And then with Aaron Gordon and with other reporters in the newsroom, we verified thousands and thousands of them for when we collected them over a 3-week period, and to sort of register, okay, when these lockouts happen, where do they happen, because there's a map of where they are located when the lockouts are. And the tip line also allowed us to speak to drivers who wanted to speak to a reporter, and we spoke to close to 120 of them to just understand how it affected their lives.
I mean, there are just way too many Uber drivers in this city. Way too many. In fact, when I'm driving around the streets and I see a license plate that starts with T and ends with C, I'm thinking there must be some kind of tax scam about which I am not aware. Because why else would so many people work for an employer that has been vilified? I mean, it's no secret that they just don't treat their drivers very well, right? I remember 10 years ago talking to these guys and they would say, Uber told me they were only going to take 20%, and so I did all my financial planning, I went out and got a lease, and then all of a sudden they said now they're taking 26%, plus they're making me pay the tax, and I'm not getting tips. So now my financial planning is out the window. I just don't understand why so many